Trump's visit. He's going to China, or he's in China already. So just to get your views on what your expectations are for this meeting.
What I think is happening even with the Iran war, President Trump trying as much as possible to sabotage the supply of oil. China.
War doesn't benefit anybody. There are often degrees of how much it affects you.
To the outside world, there's a perceived notion that President Trump is trying as much as possible to protect.
So what we see on the pages of newspapers is what is allowed for us to know.
The conversations is going to be had at a more even keel. What does victory look like for Trump? China holds significant level of leverage over the Iranians. For Trump, success will be any way for Xi to bring the Iranians back to the table to have a deal to get the Strait of Hormuz open.
This is the thing that worries me about China. They know they are more powerful now, and they are not making noise about it.
Who would have thought, right, that Iran will hold the Strait of Hormuz, and America cannot do anything about it?
We learned recently that we're looking to borrow again. At one point, do we start to get worried about Nigeria's public debt? Hello everyone, welcome to Drinks and Mics, brought to you by Nairametrics in partnership with Let Drop, Mandilas, and Swan Water. Yep, we do this every Friday. Why are you looking at me?
No, I didn't know we had started the show.
Anyway, before that rude interruption, welcome to Drinks and Mics. Of course, we do this every Friday, 6 p.m. on this channel. If you're not following, follow us on Nairametrics TV. Turn on your notifications so that you know when we have new episodes drop. Of course, you can watch it at your own pace anytime you like, and don't also forget to watch some of the other shows we have on our channel. We've got a full house today.
Boom.
Yes.
Full house today. Tunji and I, we've been the permanent fixture for a while. I hope you guys know that.
Yeah.
It's just
Have
been
you?
Tunji and I. And Arnold hasn't been around for a bit.
What? I just missed one.
What? What? So, like, one man who hasn't been around for a while is back in the house. That man.
Hey, the Oracle himself. The Oracle himself.
Your fans have been looking for the Oracle. Like when you guys, I almost told them that the Oracle wasn't going to be on Drinks and Mics. Just round them up. But I was like, no. I'll just be looking for trouble. So,
Drinks and Mike is going global. I was on holiday in France, in Paris, with my wife over the weekend, and that's why I wasn't here last week. And I was in the shopping mall. And then someone just screaming, Sam. I turned back. I looked at this guy. I've never seen him before. I can't no recollection. He said, Drinks and Mics. I'm like, my wife was like, are you a celebrity now? So it's great to see that the viewership kind of spreads across not just Nigeria, but I think the diaspora and both African and Nigerian diaspora population. So it does feel like at least we're having conversations that people are resonating with,
which is just incredible.
Big shout out again to the diaspora audience. It's Canada, it's the UK, it's the US, it's all the way France. I mean,
France.
It's everywhere. Amazing.
I was at I think I said it last episode off camera. I was at an event last week, a book launch, and so there's this chap who was one of the main launchers, but kept looking at me, was like, I know you somewhere. So I thought maybe it was, maybe some of the other things I do. And then, so I said, well, my name is Ugodre. So where do you work? I said, But she said, exactly. That's why he's always watching us on YouTube. What's that show that you guys do that you have drinks on there? I was like, yes. That she's always, I was like, your wife? What about you? He said, she's the one, she used to be a banker, blah, blah, blah. So shout out to her. I'm sure she's probably watching as well. We appreciate you all. For all the support. That's why we do this every. These guys are very busy, man. Busy guys. So the fact that we got to pull them here every week is just amazing. Of course, we've got a special guest in the house today, Mr. I let Tosin introduce himself.
Thanks, Hugo. I'm Tosin Osunkoya. I'm one of the three guys that birthed an investment firm called Comercio Partners.
Oh yeah.
Yep.
These guys, they were tired of making money for for their former employers, and they wanted to do something different. In 2016, we decided to take the plunge, and
Oh wow, 10 years.
You guys are 10 years now.
Oh yeah. Wow.
we're gonna be 10. We are 10 years this year.
I remember.
We will be celebrating sometimes in June.
Wow.
Nice. Congratulations.
I mean, people thought that we were crazy at the time because if you guys recall, 2016 was a year of a recession.
Yeah.
I was with
Especially in Nigeria.
Brand Merchant Bank. Steve Osho was with Stanbic. And Nnamdi Nwizu was with Citibank. And we told our wives that, you know what, we're tired of doing this. We wanted to build a legacy for ourselves. And I don't know if you guys recall or can still see what is happening in the banking space right now. Most of the bank owners are generations ahead of us. We don't have any representation within our own, within the banking space in our own generation. The last banking license that was granted was given to, I think, Alpha Morgan. That's maybe one or two, or perhaps a generation ahead of us.
Yeah, and that was a license. Before that, there was
so we started thinking that we needed to build a financial services, ecosystem, a mini Stanbic. And if you're going to do that, you have to start somewhere. All right, build an investment firm. Then over time, you can evolve into something else. Right. If you came to us with a legitimate business, right, it's easier for you, Sam, to speak to us because we understand our language than for you to go to one of the founding fathers of banking, in Nigeria, right? And we can sit down, break bread, and shake hands and get transactions done. And so we are on that journey, and we believe that the next phase is going to be a big one.
Like you know what I was thinking.
Now wonderful you guys have built. I remember when Steve was in Stanbic, because Stanbic.
Yeah, I was in Stanbic.
In 2016, I was living in Joburg at the time, and I was here trying to business and meeting up with Steve, and then all of a sudden, a couple of years later, knowing that Comercio had been set up, and watching the growth of what you guys have built from 2016 to now is actually quite extremely impressive.
Shout out to Nnamdi as well. Nnamdi has been on Drinks and Mics before as well, and it was one of our.
So I oversee the asset management arm of the business. We have about 4 verticals, right? Nnamdi oversees the trading arm of the business. Steve, the capital, which is the issuing house arm of the business. Then there's a 4th guy, Esosa. He drives the property development arm of the business.
All right, fantastic. Kind of reminds me as well, Sam. It's similar story too.
It's very It's
very resonates a lot with you.
Yes, it does. And in life, like when you want to just do something, just start.
Absolutely.
You don't have ideas never come fully formed. I remember when we started Crosk and then Rosk. I wasn't clear the paths that we were going, but I knew we wanted to do something that was differentiating. And like you said, financial services development is still at its infancy. So there is
in Nigeria,
right? There are big banks, and that is the ecosystem that one can say is fully developed. But there's no shadow banking system. There's no BlackRock of Nigeria. There is no Oak Tree of Nigeria. The insurance is at its infancy. Sometimes we all want to create the next Zenith and want to create the next GT.
Probably no need for that.
But the opportunity might not be there. It might be in financial services vertical that no one is talking about. And that's the direction that people like Comercio, and that's my vision of what I think financial services will evolve into.
All right, fantastic. So hope you get inspired by that. We're gonna talk later. We'll talk later about that's my man. We'll talk later about jobs and entrepreneurship. I think it's been in the news lately. So let's see if there's time enough for us to talk about that. That story about 500 people and all that, 500 employees and all that stuff. We're gonna get to it much later on the show. All right, but let's go to what's going on globally. It's a whole lot to discuss today, guys. So try as much as possible and
pace yourself.
There's so much to distill. So much. I'm looking at almost 20 pages of of what to talk about. But let's start first with Trump's visit. He's going to China, or he's in China already. To meet with Z and G or whatever. I think it's an important meeting, considering that these are the two global superpowers, whether it's in technology, economy, or even in security. Yeah, they are global superpowers, and so whatever it is, these guys sort of agree or agree to disagree, has huge ramifications globally. So just to get your views on what your expectations are for this meeting, maybe I want to start with Tosin first, and I'll go to Sam.
All right. I think we're beginning to see a global shift in dominance. Okay. Over several decades, we've seen from the British Empire, collapse. We've seen the Ottoman, the Roman Empire, right? The US, certainly, they've been predominantly the leader in this globally. What is happening is gradually we are beginning to see a shift from that dominance going to, particularly to China. There is also a race against two major elements, let me put it that way: energy and AI. And these guys are the two horses leading the race. So what I think is happening is the US, for some reason, they're beginning to appreciate that China actually is a force to reckon with. They tried last year with tariffs, and you could see that China is the only one that could say to them that, see, if you're not careful, all right, we have our own ACs and we can deal with it. Yeah, and I'm certain that some of the counsel to President Trump would have said to him that, okay, please just chill. These guys, they have some ACs that they've not even revealed to us. But we know that, yes, they could deal with us. So the two of them, certainly they have, it's not a parasitic relationship. I think it's more of a symbiotic relationship. Okay. In the sense that,
not rivalry.
Well, yeah, there is rivalry, right? So US has about 21 trillion GDP and still counting, right? China, on record, is about 18, 19. I know it's more than that. So China right now will certainly catch up, in my view, in the next few decades, catch up with the US. So what is happening now? If you look at what would happen in the next few years, perhaps maybe in the next 5 to 10 years, you would see AI driving most of the things we're doing, whether at home or in the office, and it's already happening. And on the back of that lies energy. Energy is the bedrock of everything in AI. I was listening to Jensen Huang, the godfather of AI, and he said that I was trying to describe the AI ecosystem. And he said that AI is like a 6K layer, or a 5-layer cake, where at the bottom, which is the bedrock, is energy. And energy, largely, the country that controls energy largely in the world is China. And he said that China has about 2 times that of the US in terms of energy. So you're talking about energy now. Then you're not talking about oil. So in recent years, the US has taken over in terms of the biggest producer of oil in recent years. Before now, they were not in top 3. But now they've taken over from Russia and from Saudi Arabia. What that means is that they know that if they do not parley China because of the power and dominance of China in energy, right, it's going to be an existential threat in the future. So this meeting, in my view, is President Trump saying that, guy, I recognize you as a powerhouse to reckon with, but let's just sit down together. What I think is happening even with the Iran war is President Trump trying as much as possible to sabotage the supply of oil to China through Iran. There's so many things playing out here. To the outside world, there's a perceived
notion that President Trump is trying as much as possible to protect countries like Israel, countries like the US, and some of their bases outside of the US. However, what is happening is how to control the supply of oil or supply of energy to China.
Interesting. Sam, what's your take? Interesting.
War doesn't benefit anybody, right? There are often degrees of how much it affects you. And when I look at how the distribution of pain from the Strait of Hormuz crisis is, I think obviously the South Asian economies like Japan, the Philippines, the Pakistan, that have very thin inventory buffers are feeling the most pinch. Obviously Europe, with its crazy climate euphoria, has decommissioned a lot of its dirty power, and even in some cases nuclear energy in Germany, and has become very vulnerable. While the US is self-sufficient from a availability standpoint, the oil market itself is a globalized market. So they are also feeling the pinch from the change in the pricing, right? But so my order of pain is Asian economies and India, Europe, right there, and then the US that are feeling the shocks from the increase in energy. But a certain part of the economy is benefiting from it, which is the Texas economy, oil-related, the Permian Basin, and all those shale producers. China, on the other hand, has done something remarkable. When Trump 1.0 happened, and the tariff were put on China and the semiconductor bans were put on China, China realized very quickly that it needs to do something about its vulnerabilities. And if you look at the data, while everyone was talking about a real estate crash in China and a consumption crash in China, I look at banking data and people were talking about a potential banking crisis in China. What was happening wasn't a crisis, because when you have a banking crisis, what happens is risk asset accelerates and loan growth shrinks. The opposite was happening in China. While loans to real estate sectors were declining, loans to industrial sectors were accelerating. So what was happening? China identified a few things. Number one, it needed to be as energy self-sufficient as possible. So it invested significantly in solar, invested significantly in wind, invested significantly in nuclear, right? That right now, its energy, the oil and gas portion of its total energy mix has fallen to sub 18%. And that 18% is not direct energy. It is even petrochemicals. So it's a lot more insulated. In addition to that, China has invested in storage capacity. Official numbers is that they have about 2 billion barrels of storage capacity for crude. And official estimates are about 1.5 billion of that storage. They have 1.5 billion of crude available. Unofficial numbers are saying it's between 1.7 and 1.8. That is more crude reserves than the rest of the OECD economies combined, right? The same with natural gas. The same. So China has significantly reduced its vulnerabilities, which is why when Trump attempted to do Tariff 2.0, it had more levers to pull, and it could impose the rare earth ban, which suddenly the US realized that machines in GE factories will not work. Missile technology will not work. Lots of inputs that require rare earths will not work. So back to Tosin's point, it sounds like you have an adversary that suddenly you realize you have to respect, right? And it's interesting that over the next 12 months, Trump and Xi are scheduled to meet 4 times. It's never happened in Chinese history. So that's the respect that China has earned by strategic decisions that it's made.
Taken, yeah.
It feels like it's the only adult in the room in all this mess.
Capable of
right?
And coming from someone like Trump, who is, Trump in my mind is like, like you have this guy in class, right? That everybody thinks is the biggest guy.
that guy will just be shouting for everybody. Then suddenly, there's this guy that is skinny, but very tough. Suddenly punches this big guy in the face. The big guy. And then suddenly, everybody is like, this big guy is not as powerful as we thought he was. He's still powerful. But he's not as powerful as we thought he was. So, and then obviously, so my point is, the conversations is going to be had at a more even keel. What does victory look like for Trump? Obviously, the expectation is that China holds significant level of leverage over the Iranians because they are the buyers of Iranian crude. So for Trump, success will be any way for Xi to bring the Iranians back to the table to have a deal to get the Strait of Hormuz opened. I don't think the guy wants to fight anymore. He wants to open the Strait of Hormuz and tell the rest of the world, whatever problem you have in Iran is your own. I've opened it. Figure it out, right? So, but China knows that it has that leverage. So the question is, what will China extract, right? From that. Because China can do that, given its influence. This is why we have to watch what happens with conversations around Taiwan.
Interesting.
Yeah, that's an interesting one. Taiwan.
Arnold?
Yeah. So for me, right, when I saw or heard that this was going to happen, I was trying to figure out what outcome I would like to see, or what potential outcome to see. I mean, going back to just to touch on you guys' points about us seeing China becoming a power that the US is now concerned about it to a degree, right? So I remember reading a line on the FT from the head of the CIA last year, where the head of CIA said, "We're seeing China as an adversary." He's actually there on the FT, and I was shocked that the head of CIA actually said that.
I mean,
we've seen proxy wars go, where there is a proxy wars in Congo, whether we think it's US-China, Congo, whatever it is, US-China, Venezuela, whatever it is. We've seen China become a world power that the US respects. But Trump has said that they're not going to talk about Iran. Right, he actually said, and he went to China with NVIDIA and all the business guys. So he's got in the guise of, I'm bringing U.S. businesses into China. But we all know that China has shown the world that whatever you guys can do, we can do better and cheaper. Right, so they don't need those businessmen there. For me, like I said, when I saw the headlines, it's what outcomes do I expect to see. And what do I want to see, and how do I place, place my portfolio based on what I expect to see. And the Chinese or China has always been a big advocate of peace in terms of what's going on with US-Iran, right? Just trying to get everybody to the table to talk. And my hope is, regardless of what Trump is saying, they won't talk about, they have to speak about, right? And like you rightly said, everyone is trying to figure out, okay, China, if you're going to prevent, I use the word prevent, Netanyahu from bombing Iran, what's going on in Taiwan? Right? What are you guys going to open? Are you guys going to take over Taiwan? Are you guys going to, what
does Taiwan matter though?
For China, they want Taiwan.
No, for US, doesn't matter.
I think from a global perspective, it does because Netanyahu, whatever Netanyahu is doing in Lebanon and a bit of Iran, is what China is doing in Taiwan. So it's that perspective of, okay, if you want some sort of peace or ceasefire here, or whether it's a cease or annex this part of this other country, what are you doing in Taiwan, and what's your view there? So let's now talk about that. But regardless, what I want to see is a ceasefire, right? Because I want to see assets sort of behave like we all know they normally behave.
All right, Tunji.
I think even with a ceasefire, assets are not going to behave the way you expect them to behave.
How do you think they'll behave?
We've seen it already now. Assets.
We haven't had a ceasefire.
A lot of complaints have been that with everything that is happening.
No, but we haven't had a ceasefire. Even when a ceasefire, they're still shooting each other.
But the market has still.
So we don't know what a ceasefire will look like.
Let me get Tunji's view. So I'm coming back to you in a bit, Sam. One thing Trump said when he landed was, "I'll be asking President Xi, a leader of extraordinary distinction, to open up China, so that these brilliant people can work their magic and help bring the People's Republic to an even higher level." Of course,
we're only talking about American US businesses. Yeah.
I want to gloat. Right?
You want to gloat?
I want to gloat.
Okay.
Maybe 7 months ago, when this whole maybe even longer, when this whole Trump thing started. And everybody just labeled the guy a buffoon, like
Trump?
Yeah, for the whole, taking China on, right? And the thing I couldn't understand at the time is that we do understand significantly that there are a few countries across the world that have significant intelligence, right? And I'm not talking about intelligence as in individuals. I'm talking about their knowledge about,
Data.
they have spies here. They have, they know what they are trying to, infiltrate the other country. So they know the growth of China. Probably more than most people do, right? So what we see on the pages of newspapers is what is, allowed for us to know. There are things that, the government on one side knows significantly about the other one. I've always said from the beginning that Trump knew this guy was at par, if not higher at this point. Everything was knowing that this day will come where they will speak side by side. But let me have shown my own power too before we get there. You get. Now, the whole idea of the whole tariffs, I mean, if you look at it right now, he comes to the table with some level of strength, right?
Was this cheap?
No, I'm talking about Trump.
I share an opposite view, actually.
Huh?
I share a different view.
Z has been, this is the thing that worries me about China. They know they are more powerful now. And they are not making noise about it. It's like that analogy where you say, when you see two people trying to fight, especially if it's in Lagos, and when you see there's a loud one, right, and the guy is going, and then the other guy just takes his leg to the back and just stands like this and he's looking at the other one. If you have sense, you disengage, because that guy probably knows martial arts, right? He's not saying anything. He's just looking at you. He's just watching you from the other side. And that's Xi's position. He's barely said anything. The tariffs, the bans, everything is Iran. He's barely said anything.
But don't you think that this whole situation, for the past few months, over a year, we now see Trump as erratic, weaker, right?
Weaker?
Yes. I think
I
America's actually lost its place.
No, I think the US. I think the US was significantly weaker prior to.
America cannot move its destroyers to anywhere within 1,000 meters of Iran, which is a country that was economically on its knees and had very, on paper, weak military infrastructure. This is a game changer.
Yeah.
I don't think we understand, the idea that in order for you to be able to have military superiority, you need to control the skies. And the way to control the skies is by getting large destroyers, aircraft carriers next to the countries you want to attack and sending F-35s into the air. That way you are controlling the country. That is a myth. China and Iran has shattered that myth. Iran has basically turned asymmetric warfare on its head.
Was it Iran that shattered this myth, or was it Ukraine?
Ukraine started it, but so now this concept, right, that you can dominate a country by superior air power alone is no longer true. It's no longer valid. You wanted to say something?
Yeah, so America clearly will still be years ahead of most of them, right? But again,
when you say most of them, China?
I'm talking about China, even Iran. But so you could have military, tools and equipment, but their strategy is completely different. In America, their strategy is centralized, right? So you have a command base where everything is being done. But in Iran, it's decentralized because you have other military groups outside of Iran.
Instead of the traditional military.
Yeah.
So
And
the hierarchy has its own decision making.
Those guys, they have their own hierarchy and decision making. But they stand on one mandate. If it's America, they see America as their number one enemy. They'll go after America and America's allies as well. So when you're fighting a war, you need to consider all of this, right? So Palantir is one of those in America that, powers most of America's, warfare
That's the
equipment.
company, Palantir.
Yeah. And you know that they have cutting edge, massive equipment that they can use that are way ahead of other countries globally. But if someone wakes up, Hezbollah, for instance, those guys don't care. They just go to one military base in Dubai, for instance, bomb the place. they know that it will have an impact on America. So when you are fighting that war, you need to consider that for different locations where your assets are, what is the implication? The implication too, as far as your adversary is concerned, I just want to weaken you. How I do it is my strategy. So you need to consider that.
Kind of reminds me of what Bismarck said. You win the war by not losing, or lose the war by not
But
winning.
we must also realize that for many reasons, America doesn't have as much of an interest in this Iranian conflict as it is made to be.
So
I don't think they. So
they
what?
don't
What?
have as much of a
America is
it
right now being
today-
driven out of the Middle East, and you're telling me they don't have the
No. So the Iranian conflict itself.
Yeah.
The Iranian
Well, they were
conflict.
dragged into it by
That's
the
my
Israelis.
point now.
But by dragging into it by the Israelis, they have proven to the rest of the world that they are a lot more vulnerable than people think. Who would have thought, right, that Iran will hold the Strait of Hormuz
Yes.
and America cannot do anything about it?
Yes.
Like, if you told me this a year ago, I would have
Is
told
it
you.
they will not do? They cannot do
In order
anything
for
that-
them,
Is it
in order for them to do something about it, they need to be willing to
Bam.
commit resources,
Exactly.
and people need
That's
to
the
die.
thing. That's the
But
thing.
America is not prepared to
Exactly.
take that risk
Let's
today.
be very clear about that, because now we are making it seem as if all of a sudden America has become impotent.
No, but
It's not
Tunji,
impotent. It's not important.
Sorry.
They've
But
lost.
we have history of whether you can actually, the definition of winning a war has changed.
Varies, yeah.
since
It has,
Vietnam,
yeah.
right? So it's not really about how
Tactical
many men
victories.
die on
Yeah,
that
it's not
side,
tactical victories.
right?
Yeah,
It's how many men die on your side.
And
Or how
did you
frustrating the
did you
consequence of that.
achieve your
And did you
military
achieve your
objectives?
objectives?
Yeah.
Yeah, so that's the thing, and
Yeah.
at the end of the day, and that's why people are saying, as much as Iran has suffered the most damage,
America has suffered as well.
yeah, I mean, I'm talking in terms of damage.
You have to
on
remember, in
assets and all.
Vietnam,
They didn't-
tactical
they didn't
victories,
miss, yeah.
everybody thought America was winning.
Yeah,
In Taliban, after 10 years,
Afghanistan,
we took away the Taliban to bring back the Taliban.
Taliban.
Yeah.
So
America
the
lost-
point is
America lost
always, so
Afghanistan.
again, the objective of this war, which has always been shifting, is
But
Regime
wait,
change,
let's step back a bit. The one person that started to move back military presence, the American military presence across the world, is the same Trump. Okay, not him, but he
kinda started scaling it
accelerated
back.
it, right?
Yeah.
He started moving it back from. There was a conversation about the was it Greenland? So this has been worldwide. They've been moving back military presence. So this particular conflict, let's start with the fact that he didn't want the fight. They all assumed they were just going to come in,
he wanted
kill
the fight,
the,
Tunji.
and that is why
The fight was sold to him. The fight was
Exactly,
sold.
was
sold-
sold.
The fight was sold to him.
Go and read. I read whether it's Wall Street Journal. If you go and read a lot of the real gist, the people who didn't want this war was Vance and Rubio. Rubio didn't want this war. Vance didn't want this war.
Yeah.
Trump.
There were
told
three of them
I'll
together
go-
with him
I'll
in the
go
room.
Think about it.
Yeah.
Because Bibi sold the war to him. He goes, sleeps, wakes up in the morning. We're going to fight. So, and remember, if you even go back to Trump's past statements, even before he was president, he's always said, take on these guys. You got to take on them. So he actually, he wasn't the one who started it. It wasn't his idea. It was Bibi's idea.
I always say, follow the money. Trump's biggest donor is a woman called Miriam Alderson, right? Las Vegas family made their wealth that way. She is basically a patron of the Zionist project, right? So when you want to see people's behavior, you kind of ask yourself who
who is their biggest benefactor?
Right? There was even a video that I watched recently of Miriam Alderson basically talking about third term for Trump. Miriam Alderson and Bibi Netanyahu and Miriam Alderson's husband before she died were very close. A lot of the move and a lot of the funding from APAC, that family is quite significant. And Bibi and Israelis' view is that they see Iran as the great Satan. And they were always looking for an opportunity to decapitate Iran and expand their spheres of influence in that region. They've tried for decades to do this through every American president.
Yeah.
Bill Clinton,
It didn't
Obama,
work.
George Bush. But those people saw through, and US has the intelligence to see the challenges that that process will take. But he who plays the piper dictates the tune. Your financiers have told you this is what you must do. That's why I don't believe it is a purely independent Trump decision. The people that backs him and people that supported him to win the presidential election demanded that he basically.
And
but historically, he's always wanted this.
It also feels that's
But
why
he always said he was going to negotiate, that everybody else was a bad negotiator. That I will negotiate with Iran and we will get a deal.
Which is why he
Obama's
killed the
deal-
deal.
Yeah, Obama's deal was a fake deal, that he will get a better deal. He's never said attack. He's always said negotiate. Right? So BB came, they sold it. But again, I follow the money. And I know who supported Trump
when your
significantly.
sugar daddy says go and fight.
We gotta move on. US CPI numbers out last week as well, or during the week. 3.8%, highest inflation numbers. I think in 2 years. Yeah,
2021. In terms of acceleration, I see 2021,
2023.
2023.
So hottest since 2023. Markets don't
So
care.
0.6 month on month
Month on month.
annualized.
Yeah.
With that number.
So what's your take? Markets don't care though. Why should
No,
we
no,
worry?
no. A part of the market care, another market doesn't care.
Yeah, so I'm going trying to show
One part
because
cares,
I
some
saw-
part don't
the fixed income market cares.
Yeah.
So if you look at there's a graph I was looking at during my IC this morning, which is basically the yield inverted, right, against the S&P. That line has very tight correlations through time. So if yield goes down, equity market goes up. Like over the last month, the jaw has opened.
So what's down, what's up?
So the fixed income market yields are up significantly,
Yeah.
right? While the equity market is an all-time high.
Yeah.
One of them is lying.
Yeah.
Both of them cannot be saying the same
At the same time, yeah.
right? The work that we have to do as investors is
Just
to
to figure out
who.
who's
Yeah. I mean, I quite agree with you. I think what is happening is the fact that the market has priced in this elevated level. And market also expects that it's a pass-through effect. The lag-on effect.
When you say pass through, you mean temporary?
The equity market, you mean?
But you know
Yeah. Even equity market and the fixed income market. So the fixed income market, the spreads are widening now, obviously because of the elevated levels. But the equities market is a lot more resilient because numbers are coming out. So to your point that who is lying, if numbers
both not be
if,
lying,
if
right?
numbers
Because
if numbers are coming out
Yeah.
in terms of their quarterly releases are coming out, beating expectation or perhaps even meeting expectation, that means that those companies are actually doing well. We know to date that what drives the American and perhaps maybe the global economy is the strength and the demand for AI. America's GDP now, they've recorded that, well, the GDP in the range of 2 to 3 is on the back of AI. Right?
AI capex.
AI capex. AI capex to those hyperscalers and AI revenue to those to those who are, getting the money, for instance, the likes of Nvidia.
Or ScanDisk.
Yeah.
Yeah.
So what is happening? And if you look at the job numbers last Friday show that you are beginning to see some sort of increase in jobs coming up. It's still just one number. We don't know if that's going to continue. But my point exactly is, if we are beginning to see some sort of elevated levels, would that in a way impact on the earnings going forward for the rest of the year? I don't think so.
So can you say that again?
Good.
Yeah.
So everybody's concerned about this elevated level in terms of inflation, right? If you look at the month-on-month, particularly energy cost month-on-month actually came down from a 10% to I think about 3 point something. So what that means is that when in the heat of all of this war, those prices were really elevated. So now we begin to see some calmness coming into the market. Would that calmness continue until
calmness. I thought gasoline
So
prices
it's
are
not,
up.
it's not
So when I say
necessarily
calmness-
because a 10% month on month and 3% on top of that is a significantly elevated price. It's just that the rate of
No,
change is declining.
Yeah,
right?
that's what I said. Month on month.
Yeah.
In a particular month, it went to 10.
Yeah.
And the following month, it came down to 3.
Mm-hmm.
Right. That means you're beginning to see deceleration, right? Exactly my point. So with that continuing, that's on one side. On the other side, you need to ask yourself that are these companies actually making money in terms of their quarterly releases? Yes, they are making money.
Again, so markets are forward looking,
Yeah.
earnings are backward looking.
Mhm.
So to the extent that earnings report gives you confidence about future earnings,
Yeah.
then markets should re-rate.
And the guidance after the earnings
Yeah.
release.
So the challenge I'm having,
Yeah.
Tosin, is why does America trade at 22 times earnings P, right? The American economy over the last 3 decades since the global financial crisis
Yeah.
have created a capital light approach to earnings extraction, right? So as an equity guy, there are 2 things I don't joke with when I think about asset prices: growth
Yeah.
and return on invested capital,
Yeah.
right? I try to capture both to know what valuations should be, right? America had a business model that allowed it to eke out growth with significantly low level of marginal capital commitment, which is why businesses like Amazon, businesses like Facebook traded at the multiple that they did historically. As a consequence of AI, the business models of these companies are shifting from asset-light businesses to significantly asset-heavy businesses.
But was Amazon really asset light? Would
So-
you consider them asset light businesses?
So over the years,
Amazon,
years,
Google.
they've actually invested largely on distribution.
Yeah.
All right. So they are
No,
now repaying.
even in the
But they're
past.
expensing a lot of those distribution. It's not carried on the balance sheet, right? So they spend a lot of money, but look at the balance sheet.
No, they're still balance sheets.
Yeah.
In terms of capital, they're still balance sheet heavy in terms of capital.
But,
if you look at it,
but relative to the money that is currently being spent on AI, that
No.
all this just
relative to other hyperscalers.
Amazon is probably on the capital intensive portion of the capital light conversation.
Yeah.
Yeah.
In Netflix, for example, capital light. The point I was trying to make is the business models for these companies are shifting, and the free cash flow for these businesses have disappeared. Even businesses like Facebook are now raising bonds in the bond market. People are now using debt to fund
So I guess your
capex.
point is that the rate of capex spend now
Is
way
more higher.
faster and higher than it was.
Yes,
in
and
early
the
days when they had
incremental
growth.
return from this AI is not
It's not worth it.
visible.
It's not showing.
visible.
Yeah,
It's
yeah,
not
yeah.
Yes, the market is telling you
Yeah.
that the return
AI
intensity of these businesses
going to be
are as
worth
good
it.
as they used to
Yeah.
be in the
Yeah,
past.
Sam.
because their multiples are higher.
Yes.
Sam.
They are normally the receiving.
There are 2 players in every market, right? One, the guys with the cash who are likely the investors, the companies that you are investing in, right?
Mhm.
So I hear you on the point of, these guys they're investing massively in true capex. Maybe perhaps they do not have enough use cases that would, give return on those massive investments.
Mhm.
But the money chasing the equities market right now is significantly higher than before.
Leveraged.
About 7 trillion now, as we speak, dollars
The US equities.
is in money market, and perhaps maybe in USTs. For a long time at the beginning of this year. So you are a money manager, right? And you say to yourself that you are going to stay on the sideline at the beginning of the year, perhaps because of the uncertainty in the market. This is May.
You'd have lost money.
Exactly. You need to continue asking yourself. And,
you're saying the
and
money's chasing on the equity.
S&P is at its all-time high of 7,400.
Mm.
Your investors are waiting for, okay.
For a return.
Yeah,
And you're
you
saying
say
that,
to them that no,
market is volatile.
no, don't let us do this.
Cannot
Let us-
enter now. There are waves
And
everywhere.
they perhaps have other investments in other portfolios that other managers are managing as well.
Yeah.
And those ones, they get statements perhaps every quarter.
And they're saying,
And they're saying it. But you kept
Tosin,
I'm going to-
Tosin,
No,
Tosin,
no,
let me
we had this conversation
I am
in
going
1999.
Let him finish.
I am going somewhere.
Let him finish.
So the price earning, the PE 20, the rule of the thumb is PE 10 maybe
15,
15.
yeah.
Do you understand? Which means your payback period, if you invest in something, you expect that, you know, the next 10 years or 15 years, you get your money back, right? So a PE of 20 is not entirely out of this world, in my view. You have Palantir that was trading at PE of what, hundreds?
Yeah.
People still invested in it because people are looking at the forward P of those, you know, of those companies. So in my mind, what I think is going to happen is that at some point, those guys who have kept cash under their mattresses are going to say that, dude, this thing has seven.
So let me ask you, do you think
let
it's
me
the same
come back
thing?
into the market.
And then
So
flood
let
the
me-
market.
I
with-
flood the market with that cash. So to every market, right, you have the fundamentals that you're investing in, and you also have those with cash. My question to you is, the fundamentals, are they not strong?
So I would say something.
Because I have a company right now.
There are two periods
Yeah,
where people have talked about this cash on the sideline.
yeah.
One was in 1999 and the other was in 2007. Cash on the sideline doesn't stop market from declining, right? The only positive at the moment is that the numbers have not deteriorated to the point that people are like, oh crap, what have I invested in?
Yeah.
What numbers?
So earnings that are coming out from the business, the macro numbers. So like businesses, if you look at the miss to hit ratio of the Q1 reports, most companies beat expectation.
My point exactly.
So you can sustain this improvement in the share price or manage this multiple to the extent that the fundamentals doesn't deteriorate. If the fundamentals deteriorate, it doesn't matter how much cash you have on the sidelines, the stocks will come
But
down.
I think we're missing something. I mean, if you go back to history, 99 and 2007, most of the pain that burst those bubbles were not necessarily the entire market. So, for example, the 99.com bubble was .com.
Was
Companies,
.com, yeah.
they weren't actually making any money at that.
Yeah.
People got tired. 2007 was subprime.
Subprime.
So it was a small segment
sector
of the market
Yeah.
Pushed
that just
across.
sort of ballooned.
Yeah.
And all of a sudden,
Well, it
there was
had a
liquidity
ripple
squeeze.
effect,
It
eh?
didn't mean
So-
Lehman wasn't making any profit.
Yeah.
It was just that
Ugodre,
there
you
was a
raised
liquidity
an
squeeze.
excellent point. The problem, however, is it is not very easy to identify ex ante what that niche is going to be.
Yeah,
For example,
that's the problem.
what is going on in private credit?
I was
Yeah.
about to say that.
Mhm.
That should be the thing that makes
Right.
everybody look
That
now.
could be something
Yeah.
that withdraws liquidity and air from this
Yeah.
balloon,
Yeah.
right? AI. Because some of the pricing behavior in AI,
Hmm.
you look at businesses like Scandix that was up 30 times in like less than how many weeks,
Yeah.
right? There are certain weird price behavior that you look at,
Yeah.
right? And you're just like, this reminds me so much of 1999. We have to remember that in 1999, the market went down and then it rallied back above all-time high before it crashed 90%,
Yeah.
right? So I don't have a crystal
Without
ball.
crystal balls, yeah.
But investing at this multiple with this price action,
Yeah.
with this macro, right? When I stack up the risk,
Yeah.
right? It's like, because basically when we invest based on a probability range of outcomes.
Yeah.
Right. And then when we look at that range of outcomes, we then say, okay,
You
of
weigh
most
the
of my
column.
parts,
Yeah.
am I going to expect a positive expected return?
Yeah.
The world is looking like we have this narrow positive expected return part, but there's confidence that that's the path we are going to take.
And everybody's just
Taking that path.
So,
yeah.
but Tosin, I want to ask you just quickly, right? 'cause
Yeah.
I want to link this, and I've been dying to link this, and the more I think about it, the more I think it should be linked, right? You're a fixed income guy, so I think this is something.
No, I'm
that's
not a
gonna-
fixed income guy.
Okay,
I'm a money manager.
You're a money manager, okay.
Fixed income is just part of
it's
it.
part of it.
Yeah.
But I want to talk about Eurobonds and
Yeah.
Eurobonds in SSA, right?
Yeah.
When I started trading Eurobonds, and when we started trading Eurobonds many
Yeah.
years ago, we used US Treasuries as a benchmark, right?
yeah.
So you looked at a spread,
Yeah.
right? We're seeing this crazy high inflation come up. Let me call it crazy high inflation in the West, right? Whether it's Germany, UK, and especially US, because we're talking about Eurobonds. Eurobonds are priced in dollars. So you're looking at US inflation 3.8 versus a 3.6, whatever it is, 3.3 expected. We're looking at US Treasury yields spiking because we all thought the Fed was going to cut at the beginning of the year, but now they're not going to cut. Now we're thinking they might raise, they might not raise. but you're seeing SSA Eurobond spreads thin out
because the base is going up. It's not that the actual spreads. Do you understand?
So I'm saying what base is going up. So US Treasuries are going up.
Treasuries are going up, but for some reason the Eurobonds are not selling off. So
that's what I'm saying. So this is almost like a risk. The risk on assets are looking comfortable because US equities look comfortable. So I'm saying now, I'm trying now because everyone's talking. I'm thinking, hold on a minute. I'm seeing risk on assets still trade well. Risk-free assets trading badly.
That doesn't happen.
That doesn't happen.
Yeah.
So it's happening on the equity side. It's happening on the Eurobond side. Whereas, hold on a minute. So I'm thinking now. Because as you guys are talking, that's what I'm seeing in my head.
There's another element you're taking out of.
Because you're also seeing. Okay, sorry, go on.
Yeah, there's another element in the entire piece that you mentioned, which is the supply element, right? If you look at what happened when Ghana came to the market, right? In that period, and I think that was 2020, 2021, and all of those guys were pumping, Eurobond into the market.
Yeah.
Right. So everybody could buy so much of Eurobond. What has happened now is that you have limited supply of Eurobond coming to the market relative to the global money supply. The global money supply is actually on the rise.
Mm.
So if to your point, US Treasuries is on the rise, elevated about 10 years about 4.3, 4.4. Okay. And Nigeria, for instance, is perhaps coming down at 7 and 8, depending on the duration, right?
Yeah.
So you see that sort of compression. So the spread is actually thinning out.
Yeah.
But what has happened is that you haven't seen so much supply.
So you're saying it's a supply problem?
Exactly, it's the supply problem. The private credit you're talking about are in just few pockets. If you see a lot of SSA Eurobonds coming into the market, when was the last time Ghana came into the market? Ghana is not in the market. Obviously, we've not forgiven them of what happened last time. Yeah. Outside of Ghana, who else? Maybe Kenya came into the market. Angola, too, with limited supply.
Maybe Nigeria.
So I think Arnold's point is also very prescient.
Yeah.
We are living in a world, and I think the challenge that we are having is we all studied and learned finance in a world where we based our risk-free rate on Western benchmarks.
Yes.
We are living in a world where risk-free is now risky.
But the risky is now acting like risk-free.
So
which other benchmark do you
want to asking use? Yourself, because certain things are changing. And I'll tell you, the market is not entirely irrational. Because when I look at I'm an emerging markets guy.
Yeah.
Right? So I have rules and heuristics that I use to understand emerging markets economy. And typically when I go into an emerging market, there are certain things I look at. Current accounts are usually in deficit. Inflation is usually unpredictable.
And that's exactly what's going on.
Fiscal regimes are usually at very high deficit. So when I look at Nigeria and look at South Africa, I look at other EM markets, they are now behaving like developed markets.
And if you look at
there's
UK,
more fiscal discipline. There's more inflation being tamed. Central bank has a slightly easing bias, right? Current accounts are in surplus. And then I go and look at US, UK,
Germany, France, Italy, Spain.
They are not behaving like the emerging markets.
I was listening to Catherine Mann, who's an MPC of the BOE. And she was sounding like how Cardoso should sound. She was saying, current account deficits is widening because of increasing energy. Foreign portfolio investors and hedge funds are making our bond market very volatile.
Oh my God.
I'm thinking, what's going on?
It's weird.
It's the same thing that you would expect Cardoso to say, right? And it's so these markets are behaving. And if you look at gilts, the UK gilt, which is a risk-free market, is like a 30-year high. The highest has been since 1998.
I have a quote I say in my office. I say risk-free is now free risk. and it's amazing because that's one of the reasons why we have to learn things from first principles as opposed to just cramming what is in economic textbook. Because I think the fabric of the financial system is changing.
It's changing. I completely agree with you. That is changing. But you ask yourself that which other benchmark is out there that you want to use?
Maybe we
because
benchmark.
What? Maybe you just have to use any other benchmark.
Because the entire
subject.
But we've always said that the bond market goes first, right?
Yeah.
So what we're seeing is just the first leg, and we're just seeing that risk-free is acting funny. U.S. Treasuries, UK gilts, German bonds, whatever it is now acting strange. But it hasn't actually come to the risk asset yet. But that will mean that when it comes to,
could you explain that?
It means think of a domino effect, right? So the first to go is the risk-free. Right, so the first to go is U.S. Treasury because we're saying U.S. inflation is spiking, U.S. inflation is spiking, UK inflation is spiking, so we're seeing UK gilts, U.S. Treasuries just drop off entirely. But now we're looking at the risk assets, which is the U.S. equities or UK even FTSEs. Emerging market is acting amazing. Nigerian Euro bonds.
The
first dominoes is off.
First dominoes is off.
The other point I wanted to make is you also need to look at the market participants in the asset class. Because of the way the structure of the fixed income market work, you tend to have more institutional investor participation in fixed income.
Yes. Central banks.
Equity tends to have more retail.
Yeah.
So usually the retail guys, they smell the coffee last.
Yeah.
When the institutional guys are already in full panic mode. Right. So and that may be explaining. I mean, right now,
because if you look at,
I don't know. We're all guessing.
Yeah.
If I knew, I won't be.
No, but you're right. Because if you look at so one of the reasons I'm such a big buyer of gold is because central banks are buying gold, right? So especially the PBOC, the People's Bank of China, right? But also, if you look at their holdings of U.S. Treasuries, whether you like it or not, it's almost like at a 15-year low, right? So speaking of institutional holders, those guys are actually dumping U.S. Treasuries, right? Massively dumping them. And perhaps that's what we're seeing. Is we're seeing institutional central banks actually be the first leg of treasury.
No, but central bank, I have a different theory for that.
Okay.
So the question I always ask my guys is, why do central banks need to own US treasuries at that scale? 70% of total reserves.
That's what I was going to say now. Hasn't the world changed? I mean, you would expect central banks to hold a lot of US treasuries because for a long time, you had essentially one dominant economic superpower. Right? Except maybe Germany and some parts of Europe. But now it appears that you're seeing a lot more stronger countries that are, export strong as well. Whether it's South Korea, whether it's Taiwan, whether it's China, even in South Asia, even in South America. So isn't it just natural?
I'm a bit more sinister than that. I think the core issue, the reason countries build reserves, financial assets hold no value to a country. The only value that a financial asset gives you is fungibility. You're right. The ability to turn financial asset into real asset is the reason why you own financial assets
as quickly as possible.
2022 February, something changed in the world when Russia was yanked off the Swiss system. Right? And suddenly, everybody that is holding this US Treasury saying that, with this US Treasury, I can suddenly turn it into oil. I can suddenly turn it into grain. I can suddenly turn it into real asset that my citizens need. Now say, this 700 billion that these Russians had, they can't have access to it.
It's just gone like that.
Right? So that idea of instant fungibility of assets disappeared overnight. So if I was
spooked a lot of people.
If I was a central bank governor, I'm calling my reserve manager the next day saying, any marginal inflow you get, go and buy asset that have zero counterparty. That's gold. I can buy this gold, carry it, ship it to Switzerland, store it in the gold, lock it. You get what I'm saying? So for me, right, the fundamental shift, right, is that certain assumptions that we hold there as financial market participants are no longer valid anymore.
I think that's where we are struggling with, and we're really struggling with the fact that the world is just changed.
So we need another
Bretton Woods.
Do we need another
exactly?
Smith, or we need another Milton Keynes,
Milton Friedman,
or Phil Friedman, or whatever, to come and just sort of explain.
Rewrite.
Because we are still living in that. Anyway,
My fear is that person is probably a podcaster or something.
No. The problem is, in order for you to rewrite the rules, you have to become a dominant power.
Yeah.
Pretty much. So there might have to be a military struggle before there's an economic rewrite.
Don't forget that in all of these, all these assets that we're talking about are still reference to the USD.
Yeah.
So whether we like it or not,
They're still there.
No, the US will always
it's as if our lives are really.
But Tosin, if you were born in 1930s, you would have said the same about the GPP.
Exactly.
The problem is that we live
our own era.
We live in the instant. But history happens over decades.
Yes.
Or over centuries.
You're right. Which is why I started my speech or my presentation with the fact that over the years, there has been evolution from one empire, from one dominance to the other. So you see these guys, I don't want to call out their names on the side, all right, saying that, okay, you know what, let us set up our own group, okay, outside of,
BRICS. Is that what you were going to say?
BRICS. Because clearly power is shifting. It might not be in our own generation, we might not see that. But that dominance is actually moving to them. Russia has been able to demonstrate that when they took them off SWIFT, they survived. Rubble fell at the beginning, but what happened later?
But the economy is teetering now, though.
Exactly.
But they're still surviving.
They're still surviving. So that dominance is actually shifting. And that's why a lot of sovereigns and central banks are buying gold that say, I agree with you. They're transitioning from US treasuries to gold. And I am a big fan of gold. I'm long on gold. Anytime there's a dip on gold, you go buy. At 4,600, 4,700.
I don't think Arnold is as strong anymore.
I'm still strong, bro. I'm just increased.
Not
short.
Not gold. Not gold
ETFs.
Not gold
Buy the bullion. Buy the bullion. Store it in your house. Open safe.
All right, so we'll move to local. Trust discussion so far. I think next week is MPC week.
And inflation is out on Friday.
Inflation is out. Unfortunately, inflation didn't come out before. We taped this episode. So just to get your views on what you think the MPC will do with NPR next week when they meet. I mean, last time they met in February, we saw the first cut in several meetings. Are we expecting a cut this time around?
No, I don't think so. I think.
What do you think they'll be playing in their minds?
I think they would maintain status quo. I think they are still grappling with the fact that the war is not completely out of the window, right? Energy cost clearly is still on the rise or is still relatively elevated. In my view, they need to pay attention to the impact of that for the next few months before they decide to move anything.
At what point do we think? At what point do you now say, look, this is getting irresponsible?
What is irresponsible?
Like keeping rates.
Wait.
Balance views. Exactly. So balance views. So at what point do you say, look, is it getting irresponsible to continue to keep rates sticky or high when the entire
economy is also
the only leg that hasn't broken in our macro story yet is FX stability. If you threaten that thing,
but stability is
let me explain something. Okay. If March inflation 4% month on month, annualized is 48%. Let's be understanding the persistence of inflation that we are seeing. It's not that it was just food and energy alone because of the removal of the but the problem is that if you look through the data, the inflationary spike in the economy was very broad-based. It was not energy, it was not transport, it was accommodation. Core inflation accelerated. So you are seeing some level of persistence. On top of that, for April numbers, you are now entering into the late season. We assume that during the pre-planting season, inflation in Nigeria, on average, looking at 30-year data, usually goes up to 2% month on month, just on a normalized basis. right? So you are now in a situation where, yes, the impulse from the energy shock is receding, at the same time where the food impulse is also accelerating. Within the context of that, you have inflationary dynamics that is persistent and food inflation that is about to go up, right? And then you are sitting on a situation whereby you have 34 trillion worth of OMO to roll over within the next 8 months. You want to risk pissing people off because you want to bring interest rate lower. And for a central bank that is stake its entire credibility around inflation targeting. The numbers don't tie up. I actually think personally, although I know it's non-consensus, I don't think they will hike rates because of the signaling effect. But there are quantitative variables that could be adjusted for such as CRR.
You want to tighten it more?
So you expect them to
So
tighten?
you want to tighten CRR more?
Or it depends on what they are solving for. CRR may be difficult to tighten because of the system. Because some banks will be able to tolerate it. Other banks might have real difficulty. But obviously, if you look at the liquidity surge, there's so much liquidity sterilized in SDF.
Absolutely.
So much liquidity in SDF. So they might actually have a situation whereby they tighten the asymmetric corridor, which is
tighten again when there's so much liquidity surge in SDF.
because the SDF is acting as the marginal rate for the entire fixed income curve.
You know why? Because the SDF is the money that the banks have, right? And CBN is creating a window for them to place that money.
There, yes.
Yeah. In addition to what you said, M1, M2 have been on the rise and will continue to be on the rise.
For the last 5 years.
Exactly. And that is more money coming into the market. So depending on their mandate at the next meeting, if they perceive that inflation will still remain elevated, they will not touch that anchor rate at all. They can play around the asymmetric corridor and see, okay, what can we do?
Yeah.
That's number one. Number two, they need to continue to make the foreign guys happy.
Yeah.
By keeping it high.
Yeah.
Because
those guys, perhaps they are also responsible for the FX stability in this country.
Not perhaps.
They are responsible for the stability in this country.
So I try as much as possible
to be
exactly.
Yeah, I understand.
Because again, don't forget that. Don't forget that again. Your external reserves on the rise, right? So perhaps maybe they have enough arsenal to defend.
External reserves have been declining systematically since this crisis started. The challenge I am having, the challenge I'm having right now is that I am not
we have enough buffer.
Buffers are fine, but the rate of change is negative.
Yeah,
you have to acknowledge. And the challenge I'm having is, I know Nigeria should benefit from positive fiscal impulse.
Yeah.
I've been tracking NPC data. I've been tracking reserve accretion, and I'm begging God, please let me see numbers go up so that we can start to exit this foreign portfolio investors.
But we can't.
But right now we cannot do that.
But we can't because we still need to keep, like I said, we need to keep those guys happy.
Yeah.
And don't forget that those guys are now just gradually moving into the equities market.
But also remember that those guys are now seeing higher inflation at 3.8%, and they're seeing the cost of borrowing go up.
Yeah.
So you need to cushion
you need to push, so you need to make it.
Say something before it busts.
But the carry trade is still relatively attractive for them,
as long as FX is stable.
Exactly.
Yes.
Which is
why they can play with it.
Which is what the CBN has done successfully in 6 months or more now. Yeah.
Tunji.
To what end? To what end? Because
this is the game forever, Tunji.
You guys see it
forever.
You guys see it.
You guys see it for a very long time.
You see it.
That is the answer. Now you're talking.
See,
Get with it. Get with it. Get run over.
I need you to remember previous shows when everything was going well. I was on this show saying they should cut now. Everybody on the show said, it's too early. The person is the cancer patient is now on this show. Remember that the cancer patient is just recovering now. You now want him to start running. You want to start the exercise. I remember saying at that point that markets and the economy never stays good forever. Now that it's good, let us stimulate the economy. We did not do it. Now we have come to a place where it is now difficult for us to do that. Now it is now back to we need to keep it here because we need to keep these guys happy. Now, this is what is going to happen. In another maybe 3, 4, 6 months, the economy will start getting better again.
Months? No.
No, let's just say hypothetically, like it starts to get better again. Everything starts to cool down. Things start to normalize. At that point, we will start again. Cut rates now. They'll be like, no, it's a cancer patient.
But again, one of the reasons we are not talking about a rate hike now is that Cardoso left enough headroom and has kept real interest rate positive for a long time. So if rates had come down right now, right, you would have been dealing with an outflow of capital and a potential need to raise rates more than you cut it to stabilize that cash. So I know we want low rates. I know we want, but the problem is that the macro reality, Nigeria is in a difficult place. And we have to accept that.
There are two things.
How do you have low rates with month-on-month inflation analyzing at 48%? Wait. And you have a federal government that want to borrow
No. You know why I don't like this conversation. When we are speaking against cutting rates, we speak in variables, we speak with context. But when it's on the other side, we speak in absolutes, right? So now you're saying now in the context of the fact that we know that the economy is a bit tight, so you can play with the asymmetric corridor, you can do this here, leave this here, but you can do all of this. But when the economy is good, both should not be touched. Leave everything as is.
Have you heard of the Trinity before?
Mm-hmm.
All right, so you have the interest rate, you have the inflation, and you have the FX. So when Cardoso sits down, his mandate is price stability, right? And he looks at these three, if you will, angels, and he says, okay, Tunji, how do I get a balance such that I'm able to achieve my mandate, which is price stability? And he also looks at other players outside of those three. He looks at the foreign investors, the local guys, the real sector, right? Said, okay, what do I do? Out of these three, which one drives the other two? Which one drives the other two? FX. Largely in this country because we're import dependent.
Of course.
If you're not careful, you would import inflation into this country. So he says to himself, okay, let me bring out FX. Who are the players around FX? The variables around FX? The most or the biggest player are what? The foreign investors. And so, okay, how do I keep these guys happy? You could use OMO to keep them happy, or perhaps continue to keep that rate at a level that is slightly elevated above inflation. So as far as he is concerned, he's trying to manage that. Because when you talk about letting, easing, and perhaps you think that money will go into the real sector, the real sector will feel the brunt. So when FX is out of the window, they will chop cocoa.
I explained
you look at all the companies that have been releasing their results and all of that.
It's FX stability.
FX stability.
100%.
Major.
100%.
MTN, for instance, just came out from 2023 to 2024. They came out of the woods because of FX.
Even Etel had the South Africa.
To all our points here, right? At the end of the day, right? At the end of the day, there's someone carrying the car. There's someone carrying the bag, right? And it's a lot of consumers. At the end of the day, whether you like it or not, it's consumers. So the question then becomes, I love the fact that we have a central bank that is just focusing on right? We just ours is on price stability. The only tool we use is interest rate to manage inflation. So where do we then, at what point do we then start to prioritize growth and job creation?
I wanted to...
Now, the reason why, sorry, Tunji, the reason why I say that is there are two major drivers for inflation, at least in this country. One is FX and the other is energy. The surge that you're talking about, or the 4% that we've seen is largely due to energy prices, right? The Iran war and on fuel price increase and coal been major trigger. The third aspect is often food, but we've seen food kind of,
cyclical.
It's also cyclical. So, okay, energy is the issue now. FX is largely stabilized because we have this positive real interest rate. So, are we seeing now that a little dial down in benchmark MPR will hurt foreign investors Like, so if you decide to cut rate by 50,
so I missed that.
so if you decide to cut rate by 50, I'm just being hypothetical.
Yeah.
So if you cut rates by 50 basis points, right, you still have a sizable delta between the MPR and inflation. So will that cut suddenly just scare foreign investors away? Is that what we're saying?
No, I don't think that would result in those guys, taking, the next flight, right? Because what they've done is to keep OMO available for those guys and keep them happy. In fact, what I've actually seen is there's a disconnect between yields on government security and the anchor rate. The anchor rate perhaps would affect the prime lending rate with the banks. So when it started, from Comercio Partners, when we were taking some of these guys to the market for commercial papers, they were north of 20, maybe 29, 30. A lot of them had come down now to 24. Do you understand? 24, 23 effective yield. So to your question that if there's a drop of 30%, what happens is the
30 basis point.
30 basis points, sorry. The body language is, central bank is beginning to ease.
So everything goes...
Exactly.
Yeah.
So you need to listen to the body language and some of the pronouncement or even unsaid words when the communique comes out. That will show you the direction of the central bank. If foreign investors are beginning to perceive that the direction is easing,
out.
so the guy that came in is now being incentivized, and the guy is saying that, I beg you, be like, say, these guys
so I can just...
Exactly.
Yeah.
So the guy needs to make everybody happy.
Especially when it's inconsistent with the data. Right. When you are faced with high level of inflation, global risk environment that is unfavorable
and uncertain,
right? And the positive terms of trade benefit that is yet to be seen. Right. The right thing to do is either do nothing or tighten slightly.
So more like it's irresponsible to cut.
Yeah. What if it's irresponsible to cut?
What we are saying is that rates, we will keep rates high, sha.
It has to be.
Foreseeable future.
It has to be. But Tunji, we're in the same world.
This is. I've also argued this.
So Tunji, no, I think this might change.
I do not think that we need the same set of eyes looking at banking regulation and monetary policy.
It's in the US. They have banking regulation different from
the same set of eyes.
But what does that have to do with rates? That's what I'm saying. What does that have to do with rates? Does it set the rates that banks lend? Okay, land.
Let him land.
See, the problem is that. So no, I've not said anything now. So banking in Nigeria and the banks in most economies are the primary source of stimulation. Nigeria particularly. So whether you want to get credit or you want to
so you're talking about in terms of credits. Your focus is a focus on loan growth right now.
Yes, because the economy needs it. So forget
the
about
point is that the central bank, because they play both roles, so while they're
seeing everything with the same sentiment.
Can I ask a question?
They are still stifling lending. Is that
Can I ask a question? Even if the regulation with banks and monetary were different, any lender will look at. Do you understand?
See, that's a difference, right?
Because of commercial paper, that's maybe asset management or SEC focus.
Guys
as an asset manager, you still look at MPR. Absolutely. Before, even on the issuing house side, when you're advising your clients when to issue.
MFLA brought interest rates to 7% in this market.
No.
Sorry, we cannot bring
MFLS conversation.
Because MFLS conversation.
Because this idea that if you engineer an artificially non-credible low rate environment, banks are not suddenly going to start lending.
Again, let's not pretend.
And don't forget that the bank are just coming out of NPLs of about what?
Trillions. Last year was 2 trillion.
So if I were a CEO of a bank right now and I've just raised capital and I've just cleaned my book, I'm going to be very careful.
Unfortunately.
Do you understand? Especially during my regime, I'm going to be extremely careful what sector I lend to. Unless if central bank comes up with a regulation that in a way persuades us that
so guys,
so I lend to this sector.
You see that you have been left behind. Because First of all, government securities, government bonds is not for you. They are keeping it for the guys that are coming, trying to make them happy. You come down to banks that are supposed to lend to you. Banks is like, I've just cleaned up my books, so I'm trying to be extremely careful. And meanwhile, it's not me they lend to in the first
I get from banks is that, I mean, even if you listen to some of their earnings calls, they all plan to increase loan book this year.
They don't have a choice though. They will increase it. They don't have. They will increase it.
I think you'll be at 27,
more-
29% loan to deposits. The UBA numbers are
So unfortunately, this is why I'm a bit frustrated with Trump, right? Because we were in a clear disinflationary path, right? We were seeing basically inflation trending to 1% month on month. 1% month on month annualized is 12-13% inflation exit, right? Within that environment, rates cross normalize, bank net interest margin comes under pressure. And in order for you to keep your multiple, you would have needed to basically do real lending.
So are you saying that is the only time you will allow that happen?
So if you look at Zenith now, in Q4, they basically lend 10% of their loan book. So annualize that to 40% year-on-year growth, right?
In a quarter, 10%.
10% in a quarter. So analyze that to 40% year-on-year growth. So we were starting to see the signals that loan growth was going to pick up. But now Trump has now said rates are going to stay higher for longer. So banks' names are going to hold up. So the incentive to Shago said this really well. He was like, ultimately, my job as a bank is to optimize the yield on my interest earning assets. I have 3 asset class that I can lend to. My investment security books, bank placement, and my loan book. I need to ensure that I earn the right yield, risk adjusted return. Why will I lend to somebody at rates that are equivalent to my investment security books, and then I have to take capital charge and potential risk of MPL down the line? It doesn't make any sense.
And general provision as well.
So you need to engineer. So your point of being left behind, Tunji, is sentimental.
It's not.
And it's very. Guys, I know there's been a value transfer from the consumer, right, to the government.
Very painful.
No, and it has been destructive, right? But the point I am saying is, in order for us to get out of this destructive part, there are certain decisions painful that we had to make. And we could go back and critique this government that the FX liberalization was not done and sequenced as well as it should have been. The excess that has come from the savings has not been deployed efficiently. There's a lot of things to beat this government about, no doubt about that, right? However, when you look at the decisions that have been made and the inevitability of the transfer of value, the other points, Tunji, I wanted to make, and this needs to be made very clear because people don't seem to understand. When I listen to people on the main streets, they tell you that when Tinubu came, FX was 750, right? And interest rates were lower. Today, and price of everything has gone up. Today, price of everything has gone up. But they don't realize that there is no way in the world they would have lived in a world today that was 750 FX rates, given the trajectory that we were on
be held at
that time, because it could not be there. So I know it's not easy for people to comprehend counterfactual arguments.
This is not that this decision making that this guy's made. No, you guys are trying to rewrite what I'm saying. My issue is not the economy. The macro is fine. That's not my argument.
Not the decision around the macro.
My issue is when it was fine, you said no, it's too early.
But it was never fine.
It was not fine. Now we were just stabilizing.
But we know the world for what it is.
Would you have accepted a rapid interest rate decline that would have need to be accompanied by capital outflows? We were not talking about a rapid interest rate increase now.
No, we never spoke about interest rate FX was you said interest rates. I talk about interest rate was the major concern for me. And because the core drivers of the economy. So like right now, let's look inwards. The things that are keeping, aside from FX stability, the other thing that is keeping the nation a bit sane is the fact that there's petrol. It's a more expensive product. It's more expensive, but there's petrol. Right. The other part is that the exchange of foreign supermarkets, foreign markets, consumer markets. I'm not talking about consumer markets.
Exits of the foreign guys, or
have been replaced with smaller participation now. So we have a lot of guys that are struggling here and there to fill those gaps, right? So we have some sort of exchange. Now we have those guys everywhere, right? We have the likes of the guys that replaced ShopRite. Now those guys still need capital. Them going to borrow at the rates that the market is doing right now doesn't help anybody. It doesn't help the consumer. It doesn't help the businesses. Ultimately, it doesn't help us.
This is why we're seeing an explosion of commercial papers. Where these guys are saying,
now
we don't need to go to banks anymore. That's
why. And we all know that those commercial papers, at the beginning, they were looking very beautiful because it was the A-lister names. Then we now moved down to
factories with commercial papers.
Bam.
You don't make
you see what I'm saying?
So in all of this,
my thing is, wait.
Some of them are doing it.
You should just tell me.
No, but you can't.
Wait, you guys should tell me. When do we now reduce rates? What are the factors that will now allow us drop rates?
So let me call your attention to something. All right. So I don't know if you've been in the lending space before. No, I've
never lent anybody money.
Good. That's why we are so passionate about this. There are three major dimensions to lending, right? The borrower, the lender, and the pricing. Yeah. What I hear you say, and you're passionate about, is you are looking at the pricing, and the lender should push out money.
He's not looking at the quality of the
borrower.
Oh, yes.
So I had someone that was working with me at the time, and he called me, this was 2 years ago, and he said that he had about 4 apps on his phone that he was exposed to, that he had taken money from there. And he was unable to pay back. And he said he wasn't going to pay back. And someone had given you money for that. That means that goes into NPLs. And this is at the base level. Now let's go to corporates. Some corporates will go into the market. They know they're not going to pay back. At the time, they'll give you everything that you want in terms of the numbers and all of that. And you give them money. That money doesn't come back. Someone takes the brunt for that.
So is that a reason why we shouldn't lend then?
No. I'm going somewhere. Okay. So the banks over the years, and some banks have gone under because they felt that, you know what, we're in the business of lending. So intermediation, let's do this. And they lost their shirt for it. What I think has happened, or we should do, we don't have that centralized infrastructure that holds everybody accountable in a manner where
rating agencies,
in a manner where if you come into the market, I know we have the credit bureau and all of those guys. In the US and developed markets, you begin to see how your credit score, in fact, you'll be pushing that your credit score should go up. We don't have that here. In fact, you have banks lending to an individual in multiple ways, and the individual gets away with it. Or you have corporates that in oil and gas and in some other, sector that have gotten away with taking money from the banks, and they've not been able to pay back. If you're beating one, you say that yes, one shy, but if you're beating twice,
of course you're done.
Exactly. So the banks, listen now, I'm telling you, because I asked you a question that have you been in the lending space before?
But you see, this is
when you are lending, the main thing is return of capital.
See, not on. There's return of capital and there's return of capital. My point exactly is, as a bank owner, or anybody that's into whether you're raising CPs or you're lending money to people and everything, your ultimate goal is to have that money come back. When you're beating once, two times or three times, you begin to think that, okay, what else do I need to do? The solution to this, in my view, is to build that infrastructure.
I agree.
Do you understand? That infrastructure that holds everybody accountable.
You're saying something completely different here. Because, so my point is, or I'm trying to
lending is not only a pricing function.
Not just that.
It's not only a pricing function.
Let me summarize it.
That's what it said.
It's not only a pricing function. So the point is whether you lend at 40% or 2%.
In fact, I'm wary of lending at 40%.
You still need to have these things you said.
Exactly.
So
my point. So the question I've still nobody has answered me. Should Nigeria too just close shop and go home?
No. Nobody's saying that.
Because this is what it sounds like.
The better way to put it is this: like we've been talking about interest rates and lending for a better part of the last 1 year. And might be too early for us to start to look for rate cuts because of how much things have been bad. But I guess it's also not too early to ask ourselves, what next? Where does this end, right? Do we want a world where it's okay, interest rate is elevated for all these reasons, and then we continue to attract
Foreign investors, they just come in and
fixed
go.
income security.
And we just
mind you.
and also just keeps getting sharper.
Hold on, mind you.
I know this is making me tons of money.
A lot of the borrowing is actually government. And government is the one
they're crowding
borrowing.
out there. They're out there. That's
It's not even the crowd out
on the
effect.
pricing
It's not even
side.
the crowd out effect. They are borrowing at very high interest rates. And we're all savvy enough to know that when you borrow at a high interest rate, you are essentially building a fiscal crisis.
Absolutely.
That is going to, at the end of the day, happen. And when that happens, the same thing we're all trying to avoid today.
Yeah.
Right?
Imagine when government doesn't do return outs.
And the point is that the guys,
so
the guys now lose
No,
their share.
I think sometimes we
And that's what I'm saying. How do we because it's also important. I mean, policymakers will watch what we're saying. And some of them listen, right? And these guys are not, it's not like they have crystal balls. So what I'm trying to get to here is that where's the balance? At what point do we say, okay, you know what? There's certain risk that we need to take for certain reasons.
So me, I don't know. Let it be high. Let it be high. Let it be high for as long as it is high. But when we get to interest, inflation, 7%, money supply, this. We know that let's say that that's the benchmark that we get to, and we start cutting rates.
But you know,
what is it?
Nigeria is not mature enough for a single-digit environment.
No, I'm not saying that. I'm saying what is the parameter? Where do we get? What's that finish line that we get to?
So economics.
That's not even what I'm saying, and that's not how I even think we should approach it.
Yeah.
My point is, I think that we're in an economic cycle or situation that a lot of us are probably not used to, and I don't think it's the traditional way that we look at things that we should be looking at it now. So we could actually continue in this trajectory
for another 10 years.
Hope you know that. What it means is that Trump could decide or China could decide to take on Taiwan, and then everything changes, and then next year, God forbid, it could be another virus, and then everything changes, and then so you could start to see different things happen that impact on the so-called trajectory that we're seeing. So, what should be our response?
So
that's my point.
I think at the end of the day, in economics, you deal with the constraint that you have and not what you want. Ideally, you should want them to be.
What? Not the wish. Not your wish list.
The fact of the matter is Nigeria remains a small, open economy that would navigate to the ebbs and flow of the global economy.
The whole world.
Whether we like it or not.
Most economies are like that. Anyways.
No, some economies are more resilient.
I said
right?
most are.
Yeah. So the point I'm trying to make is also, despite that, I have been positively surprised at the anti-fragility of the Nigerian economy. And what I mean by that is this economy has shown the capacity to pull levers that I didn't know even existed. For example, if you had told me that we'll go through a macroeconomic adjustment without a significant fiscal backstop, I would have told you it's impossible. But we did it. Right? So,
but at what cost?
The cost is high. I agree.
There's always
it's a trade-off, right? Economics is always a trade-off. The point I'm making is, the point around high borrowing costs, fiscal dominance, right? They are valid points. I don't want to use the word hope because I don't like hoping in economics.
It's always strategy.
Yeah, I don't like hoping in economics, but we should have positive fiscal impulse that comes from the positive terms of trade as a consequence of the higher oil price. And also, our oil production is now starting to head in the right direction. You combine those two. So what has now happened is the challenge that we have is we've decimated our C part of the economy.
Absolutely.
And I think the G part of the economy is getting better. We just don't trust that G part.
So
Yes.
so
We just
what's
don't trust that
wait,
G
wait,
part.
wait,
How did you get to that?
Sam,
What's better?
the G part, before you go to the G part, the high part is the most important.
Yeah, so we need to
I'll
kickstart
tell
that
you why
investment
the
cycle.
high part. So the high part controls the C and the G. Do you understand? And perhaps also influence the
X minus M or
X and the
whatever.
N.
And yeah,
Dangote Refinery is a classic example.
of the eye. Yeah.
Our trading partners will continue to smile at us. And when I say trading partners, I'm not talking about just crude oil. I'm talking about globally on all commodities, right? They'll continue to smile at us and say to Nigeria that that country, right, is blessed with enormous resources.
Yeah.
However, they've not been able to move from having those natural resources to being an industrial nation.
Yeah.
So Dangote Refinery, for instance, has been able to demonstrate how building an industry can help your country, all right, propel to the next level. If Dangote Refinery, for instance, was never in existence, guess what would have happened to us now during this?
But you know what's funny in all of this?
Mad chaos.
You guys forget
Mad
that.
chaos.
You guys
So
also
you-
forget that. So,
no,
sorry,
no,
Tosin,
yeah.
You also forget
Yeah.
very quickly that Dangote Refinery's existence
Yeah.
today was also because he got FX allocation, he got loans at some concessionary rates. A lot of the things that a lot of us
The guy didn't get loan at concessionary
Bro.
rate too. He got FX allocation.
he did, he got FX allocation, but a lot of the
know.
loans, hey, go check those things. A
Those
lot
loans
of
were
the things
syndicated by
that
proper
he
bank, like
did-
Standard Chartered and
He
those
did
guys.
get
But-
away with
Yeah.
a lot of concession.
But it's been tried and tested in the market.
Oh yes.
No, so
That's-
So you can't
That's
compare
for sure.
Dangote to many other
So, but
corporates
my
come.
point-
It's been tried
Nigeria,
and tested.
So my point is that
Nigeria
this-
should have
this
an industrial
investment-
policy.
God bless
It's
you.
not the central bank that should run it.
That should run it.
Oh, I agree.
So there's no
I agree.
alignment.
I
There's
agree.
no
But you
alignment.
cannot
Ugo,
have an industrial policy that runs at an interest rate of 25%.
No, you could. So I agree
How
with
is that
you. I
possible?
agree with you. So it's a chicken and egg thing, right? So we need to ask ourselves that, okay, before you move into industrialization, what is the bedrock of that? Infrastructure. Dangote is saying now that he wants to go into 30,000 what? Megawatt, right? I wish him luck. And I pray that some private investors can come along with him. If we do not solve that problem, what happens is that we will still continue to be at the receiving end for all our trading partners. I say to people that what has happened in FX now, in terms of FX stability, is just us kicking the can down the line,
Yeah.
down the
Exactly.
road. Because at some point, the USD is going to catch up. So what I think would happen, and there are layers. So if you deal with infrastructure, then we go into industrialization. Then we go into perhaps maybe AI or whatever it is.
Where's the money?
Forget about that one first. We are not even close.
Where is the money for the infrastructure?
No. So I will say this.
Where is the money for the?
So
For the first time in this today.
The more
Wait, because
this morning I was thinking about it, and I said to myself that the banks have not really been supportive in terms of infrastructure in this country.
You can't blame them.
No, they haven't.
Yeah, and I'll tell you why. So you have the likes of, and infrastructure is very broad. So when we say infrastructure, a lot of people just think that maybe it's just roads and
it's even
you know,
data
it's-
centers, it's masts, it's
you have
Yeah.
very few funds in this country, and their sizes are not so big. So if you have Chapel Hill infrastructure, you have ARM infrastructure, you have what else? Maybe MSIA too. They're doing a bit in infrastructure as well. Mofi maybe a bit in infrastructure.
Guys.
The banks should actually come together from this capital raise, if they have anything left after the credit loss, right? And say, okay, let us get someone that would drive a massive infrastructure fund of maybe $1 billion or $2 to start with.
Yeah.
And we put all the monies that we have, or some of the monies we have, raised into that fund and say in different sector, let us begin to what? Drive infrastructure.
Yeah.
See MTN, for instance.
I don't think it will work.
The cost of funds is too expensive.
No. I will tell you why.
The
I'll
cost
tell
of
you
funds is too
why.
expensive.
In order
some
for
people
you
said,
to
some people said that
I'm not beginning to worry
Pension
about
Act in 2004 that wasn't going to work. The Pension Act.
No.
In 2004.
So the point I'm trying to
Why do you
make
think
is
Pension Act worked?
I
Why
don't
do you
know.
think? I will tell you why.
Yeah.
Because there was a an act behind it.
Yeah.
There was a regulation behind it that made it compulsory for all of us.
Yeah.
Some of us don't want to pay that 8% now. But you have to pay it.
Yeah.
So when you have
So you're saying the regulator should push.
exactly.
See,
But then that would have to be making consensus for.
So this is where we need to have an industrial plan, right?
I think we have one now.
I think that there's a new, but it's the most
execution
articulable. Executing it is where the challenge is. The point I'm trying to make is to have a proper industrial nation.
Yeah.
There are certain parts of infrastructure that generate positive commercial return.
Yeah.
Those can be handled by private capital.
Of course.
Yeah.
That's what I always think it should be.
Okay, a key infrastructure, which is basically the quality of capital that you have, I'm saying human capital, is education. You cannot private sector fund education at scale. It's not going, the maths will not maths.
Yeah.
Yeah.
You get what I'm saying? So while a huge part of industrial planning is to decide what part of your infrastructure development, capital development can be handled by the private sector and what part needs to be handled by government.
Absolutely.
I cannot commit my investors fund to go and set up a primary healthcare facility in Borno.
But your investor fund has a time span. The capital that these banks have raised, they are long-term capital because they are equity capital.
But I have my deposit too. You leverage. So you leverage the deposit, the equity is loss absorption capital.
Yeah.
The money that you lent out is my deposit. If you put my deposit in infrastructure.
But come to think about it, the deposit we're talking about, some of these banks, if you look and thoroughly reviewed their financial statements, they have sticky funds that have been with them a particular threshold for many years. What are they doing? See, the problem here is that federal government unknowingly or knowingly has created an incentive for those banks not to lend.
Is it the federal
or
government?
not to create any infrastructure fund? Why? When federal government securities, that counts for your liquidity ratio, all right, and risk-free, and there's no capital charge, no loan loss provisioning, is giving you something relatively interesting, like maybe 19 or 20%. And your cost of funds is perhaps maybe around 10, 11 or 12. You have a huge margin. So tell me why you wake up in the morning and say, okay, let me put my money in infrastructure.
I agree.
Until
we're not talking about
which is inflation. Inflation.
Inflation. So that's
Inflation. You need to Nigeria. See the task that Nigeria has. I can reduce it to a single phrase. Nigeria needs to figure out a way to compress real interest rates.
How? There was a senator who said that we should bring the Chinese to run power.
No. We need to study what our structural drivers of inflation are.
Yeah.
Right?
We don't know.
We know.
Is that we do? Okay, I'll give FX.
FX is a major
I'll give you an
anchor.
example. One of the reasons why transport inflation feeds very rapidly into food inflation and restaurants and accommodation is because for some stupid reason,
We don't have
Nigeria has decided to anchor its food transportation infrastructure on 30, 40-year-old diesel trucks. Right? With no investment in the replacement cycles of these trucks. Despite the significant level of improvement in diesel technology over the years. Right? So that is why as soon as diesel price goes up, you are not only paying a higher price on that diesel, you are also loading it on trucks that are consuming 3-4 times what your predecessor in the UK, your competitor in the UK or other economies are consuming. So there needs to be a reinvestment in the refleeting of the transport infrastructure for Nigeria.
We're still talking about infrastructure. You know that, right?
No, I agree.
In all of these, we've been talking about cost push inflation. You know, when you talk about inflation, there are two dimensions to it. You have the cost push inflation. You have the demand pull inflation. The demand pull inflation is money in your pocket, chasing after this. So there's no control with that because Nigerians are resilient with getting money out. let's take, for instance, real estate now. The landlords are coming after everybody saying that, they've increased rent price.
Yeah.
But do you know that people are still paying?
Yes.
Yeah.
Yes.
You ask yourself, where's that money coming from?
Yeah, where's
your
it coming from?
disposable income naturally hasn't really increased.
There's no wage growth. Yeah.
So money's coming out somewhere. You ask yourself, where is that money coming from? So if the landlord sees
market economy.
if the landlord sits and he says, this is my
favorite
price,
part of the economy.
but the landlord feels that at this price there shouldn't be anybody showing up.
Yeah.
But guess what?
be.
People
Yeah.
are actually showing up.
Yeah.
There's landlords say, this is the price.
Yeah.
And there was never a time
That's a
people did
demand
not show up.
pool.
There
Why
was
is
never
that?
a time.
We have, unfortunately for us, an informal way of getting money outside of the disposable income, which is the formal way.
Yeah.
The informal sector of getting money is more powerful
Is the
than
racket
the formal
economy.
one of getting money.
Sam.
So when you talk about inflation, don't just look at it about from the cost push, which you right now you're condemning everything the government is doing. You're saying that they can do a lot more. But what we ourselves
I did.
are doing, we are not paying attention to.
So,
that.
Sam, I am not opposed to your view.
No, wait, let me say
I have
something.
significant
you
issue
said
around
something about
sequencing.
you said something about the core drivers of inflation. One of the issues is food. It's not just transportation. It's mainly storage.
The storage,
Storage is a bigger
which
part.
is why you have that volatility.
Exactly.
and
Storage is a
seasonality.
bigger part. So if you can
That's
get from,
infrastructure.
if
It's
you
all
can get from
infrastructure.
A
It's
to
all
B,
infrastructure.
at least let B have enough for 3-6 months to be able to distribute in those places. There are places across the world that do not have mangoes, that do not grow bananas, but you find bananas all year round, fresh, ready to eat. Right? The amazing thing in Nigeria is that we have mango season, we have agbalumo season where we grow it here. Now the conversation is, for instance, I was talking to somebody recently who is heavily interested in the investing in the storage business. The only difference here is that this person has significant store of capital, so he's like, okay, let me bring up my own capital to do it. But if I was an entrepreneur on my own, that I was thinking about it from like, I want to go into the storage business. Can I have small capital, go to a bank and then go and borrow from the bank and then start doing this? I'm unlikely to find. And we know this is true. Now, for many reasons. One, even if the bank were to give me the money, at what interest rate? And when will I pay it back? To be able to pay back, because if I'm doing storage,
you can't solve.
You can solve.
You get, and oh God.
All right, guys. Let's move on.
I know you're paid.
Let's do a lot of talk. We've done an hour and a half already.
Oh wow.
Yeah. So I want to also talk about something. I mean, a slight segue. Public debt over 150 trillion. We learned recently that we're looking to borrow again.
Yeah.
And
think
the
we'll
president
probably
also
get
just
upgraded soon.
complained
Our system will get
massively.
an upgrade.
The president complained that about 50% of government's income is going to servicing debt. And he was blaming the high interest rates to foreign countries who impose significantly high interest rates to borrowing from sub-Saharan African countries. May have a point, but at what point do we start to get worried about Nigeria's public debt?
At what point? We should see.
I think now.
About many years ago. I think the challenge, the problem is not in the borrowing, it's in what you're using that money for. Right. Our debt to GDP is still relatively below 40%. If you compare it to other economies, right, of this world, they're probably almost 100 or even more than 100.
So over 100.
Right. So you ask yourself that when you borrow and you use the money to finance consumption or to finance wages and all of that, that money is going to the sea that we're talking about. It's not going into...
Is it even going to the sea? Because it appears
It's
that
not
we're
going to the
borrowing out
sea.
to service debt.
Yeah.
Yeah.
That's what it looks like we're
You're
doing.
borrowing to service.
Yeah,
debt.
no,
we're
it's
refinancing. We do
so-
commercial paper.
So we're borrowing to serve
We're
we are borrowing to
refinancing.
serve I, but not directly. It's not I.
No,
as
it's
I to
interest.
I.
Yeah,
It's I as the
interest.
holder of the I, so that the
So-
holder of the I has
so-
money in his pocket.
Yeah, so we just
No,
have to hope
you-
that we have
'cause
access
it-
to markets.
you-
Because once we lose
um,
access to market,
that's
then
it.
No, but
And that access to market is always the problem. I'm asking, to what end? So we have access to this market. So to what end?
Guys,
Keep going.
Guys,
Keep going, Abi.
guys.
That's what I told you, it's the game in every way.
So
In every single way.
again, our conversation will all circle back
to the need to have low real interest rates.
Mm-hmm.
Because the idea, when you look at
Low real interest rate, I like that.
the when you
Best way
look
to have
at
low rate interest is suppress inflation.
exactly,
Right.
that's you have to solve, and inflation is a structural problem, and then you have to have effect stability, and so we can talk to that. Right?
Yeah.
The point I want to make about debt sustainability, when I look at a lot of EM economies, right, we look at the primary balance, and then you add interest rates to it.
Mm.
Most EM economies that I've looked at would usually run a primary deficit, right?
Mm-hmm.
Nigeria actually runs close to a balanced budget on the primary side.
How?
Go and look at the numbers. The real issue is on this debt sustainability part, that once you add to it, the whole thing gets out of whack.
No, how we? I'm trying
No,
to
no,
understand
no,
the
it
balance
says
budget part. How?
minus debt
So,
service.
so when you remove,
Even if you minus it, how?
So
That's
you
what I'm
move-
wondering. Let's even back out debt service.
Nigeria basically spends as much money as it can earn in revenue. That's what it
No.
does. And then it uses the debt market.
The last three budgets, recurrent and capital expenditure,
Yeah.
have been more than revenue. I'm not talking about debt service.
Sorry,
Recurrent and
ex-
capital expenditure. If you add them together,
No, they're usually more than revenue. Now. That's
Exactly,
why
so
you
it's
have
not
a
a
budget
fiscal deficit.
deficit.
That's my
Yeah,
point.
That's why
you
you have a
have a
fiscal
budget
deficit.
deficit when you add your interest payment to it.
No. Even without interest payments, we have a deficit.
no, without
Even without
interest
interest
payment,
rate.
You have a primary.
Yeah. We
Yeah,
have
I have to
deficit.
go and
Yeah,
look at
yeah.
it.
Look at it. Look at it.
Yeah,
Even
yeah,
without
yeah,
it.
yeah.
Yeah.
I don't
deficit.
even pick it up.
We do.
Nah.
No, because think about, look at the numbers now. So
We're
we
doing-
have
we're doing-
for this year, right? We have 68 trillion expected budget,
Yeah.
of which the deficit is about 29 trillion,
Yes.
right? So nominal GDP is 300.
And when you say debt service, you know it's a combination of the primary and the interest.
Yes,
Not just
yeah.
the
So
interest.
I'm saying,
Yeah.
I'll have to run the numbers. I think I want to discuss this in a
Okay.
bit more
Yeah, yeah.
details. During
I mean,
the
for
next
me,
meeting.
you see-
The point let me land somewhere,
Yeah,
because I
okay.
want to talk about this idea of like, so a function of high interest cost
Yeah.
and low revenue mobilization
Yeah. Mm.
has created a situation whereby we are basically spending more than we are receiving.
Yeah,
Right?
Basically.
However, I want to say something, that the size of the government
Yeah.
relative to the total economy is actually quite small,
Yeah, I think so.
right?
Yeah.
It's actually quite small. And then when I look at consolidated fiscal accounts, which includes the state government and the local government,
Yeah.
right? I don't see the crisis that everybody screams about. I'm not saying things are good, but that we will get to a point where we have to restructure like Ghana. We could get there if we continue to compound at very high interest rates.
Yeah.
But it's not when I look at macro risk facing Nigeria, I have fiscal dominance there,
Yeah.
but I don't have fiscal
Defaults.
crisis.
Yeah. Yeah.
I think,
You're
I think
right
that's
about
the
that.
problem.
Let's-
I think that's the problem Nigeria has.
Yeah.
It
We never get to
but it's
fiscal
not really
crisis.
bad like that.
No, but we almost got
No,
there.
a bad.
I think that
I'll
we-
tell you why it's bad. Let's put it in the right context. So
yeah.
you look at your GDP, right? And you say to yourself that this GDP, how do I flog this machine, if you call it that, in a way that it generates a lot of revenue?
That grew 11% in dollar terms.
In a lot of revenue. So put
Guys,
it.
you want to put guys,
He's a stupid
you want
boy.
to get me into trouble.
It's just like you. It's just like you having a bank balance sheet, and you look at your balance sheet and you say to yourself that, and we can use some of the figures for instance, and you have a bank that has a very huge balance sheet. Yeah, but it's not generating enough revenue. you could. No.
Does the bank has yellow in the logo? Or does it have blue?
It's paper rich, but cash line.
So you go around in the on the continent and you say to yourself that you are one of the biggest or if the biggest. But people ask you that, Oga, how much revenue are you really generating from your size?
Yeah, of course. Yeah.
And you continue to borrow on top of that. That is where the issue is. If you're going to borrow and addressed issues that we've talked about, which are fundamental structural issues. Dangote has no business, building a refinery if Warri and Kaduna were working.
Government has no business in refinery either.
Exactly. So my point exactly is that if we can use some of these monies we're borrowing to address
the structural
So let me
issues.
ask you guys- let me ask you
I
guys a
agree.
question, right?
I don't disagree with that.
Are we running a fiscal Ponzi here?
Are we running a fiscal policy? What do you mean?
Feels like
Fiscal Ponzi.
Ponzi.
feels like
Okay.
Let me
based on all the things we are saying.
you don't want to backlash on
Is
this.
there a modern day economy
That is not running a fiscal policy. No, let's be honest. Everybody's been financing. Everybody's been a joke for a while. This has been a joke for a while. Just refinance. Just refinance.
No, I'm not going to answer.
That's why I'm surprised when Ghana defaulted.
No.
I mean, why did they default?
I know.
They could just refinance. That one is because they went to mention people that they shouldn't have mentioned.
If you put it that way,
I think do you know the number of times US have had debt ceiling?
Thank you. Let me explain my own definition of fiscal Ponzi. So here we are, right? We're saying we need to keep interest rates high for inflation reasons, one, and to continue to attract foreign investors. That's fine, so that we can keep
The FX stability.
Keep it attractive.
Right?
Yeah.
Then we have on the other side the only guy who can borrow at that kind of rate, which is the government, because it needs to keep borrowing, so that
You can pay the last one they collected.
Pay the last one they collected. Right?
Hey, that's a Ponzi.
For the foreign investors, they're like, well, okay.
As long as I can keep paying.
That's what I'm saying. It's the game. It's the game. It's the game.
The cycle keeps us.
Of course.
Keeps us building on each other, and it goes. And then the government says, well, anyway, 60% of my borrowings is naira anyway. So worst case scenario, we print, right? And we print, and we print. And then who holds the back high again?
So and the balance sheet continue blowing up.
Yeah, and then who keeps holding the bag?
Possible part for Nigeria.
Yeah,
That is the path for Nigeria. Honestly, that's the part I see. Because I don't see the global macro improving anytime soon.
So this is
regardless.
guys. Every economy in the world, that has moved from emerging, poor, whatever, to stable economy, did not do it in ideal circumstances. They might have had a plan. They might have had things come together to be able to facilitate that growth. But it was not done in the ideal circumstances. China's emergence as an economy did not happen within. It wasn't as if inflation was low in China at the time. India, as an emerging economy, it didn't happen. I mean, we still see the levels of poverty in India, but they've moved a lot of people out of poverty. I can keep going on.
There's a huge difference. These guys at the end of the day were able to. You see, one thing I've always noticed is that, sorry, Tunji, whether it's India, whether it's China, whether it's Singapore, whether it's even Taiwan, one thing these guys were able to do is to have a semblance of self-reliance. So there's a lot of their domestic consumption.
We're saying this. We're going there.
And then I'll talk about my socialist terms.
No, it's not socialist. It's not socialist.
It is. That's what these guys did, though.
Yes, that's what they did. That's what they did.
They forced money to stay inside. There is no liquidity to fund. They forced money to stay inside. They forced liquidity to invest.
Let me finish what I was saying.
That's what they did.
Arnold,
Nobody was.
Let me finish what I was saying. Let me finish what I was saying. I'm saying that none of them grew.
China,
none of them grew in ideal circumstances. None of them grew in ideal circumstances. In Nigeria right now, there are a lot of things happening. But those things that are happening are ensuring that the development that we are looking for will never happen. So what I mean by that is there is investment that is required from government's perspective. There's investment that is required from tier one capital owners in Nigeria level, right? then there's investment that we require from business level in
But the
Nigeria.
senators need to drive nice cars now. So that's
So when
investment
the likes of Dangote, when I'm talking tier one investment capital, the likes of Dangote, the likes of investment, funds across the country, their level, I think they are deploying, not as quickly as they should deploy, but they are deploying, right? Where we have missing in terms of the development narrative is at that level of MZO down. Forgive me for using MZO as a narrative, but I'm talking about
done malaria API now. What do you want them to do?
I'm saying I'm using them as an example of the kind of
so it's in
business.
liquidity is not
The
available to
kind of
them.
business. I'm saying that kind of a business, and they've done fantastic.
They've done well. Like,
So that's what I'm
saying.
That's but the point I'm saying.
Okay.
From that kind of business down
Yeah.
is where the gap is. Now, from that
So,
level of business down,
what gap in
the
what?
ones
Sorry.
that are doing
Tunji, sorry,
big
gap in what?
few and far between.
Yeah.
MZO, who else?
See,
You
guys,
you now start counting them with
fits in.
you now start
in,
all right, continue.
the cure.
Some guys look at
Can I say something?
Yeah.
And I don't want us to be too nihilistic and defeatist about the prospect for Nigeria.
Yes.
Unfortunately, we have existed in a global system where we're doomed to fail. Right? Because our development was predicated on the ability to constantly have access to offshore technical
Foreign capital.
and technical resources.
and
technology.
And technical resources.
Exports and
frankly,
leave us.
no one really cared.
Yeah.
So and change can create positive outcomes and negative outcomes. But change is always when you are a loser, you welcome change because it's an opportunity to change your lot. If you are condemned to penury and something is happening at the top, you should be celebrating because things could get worse for you or could get better, but there will be a change. Africa and Nigeria has a unique opportunity today that I feel it's not had in the last post-independence. What do I mean by that? What has happened in the world has basically created a situation where people understand that just-in-time global supply chain is fragile. So now it's now just in case. What does that mean? Right? It means that for most nations, they need to build internal strategic assets. They need to build oil reserves. They need to have access to commodities. They want the things that Africa is long. This creates a unique opportunity for us because it allows us to be able to attract capital. I'll give you an example. Europe has been brought to its knees because of the cost of energy. First, the Russians. Second, the Middle Easterners. Right now, if you are a European leader, you are thinking about how do I build redundancies in my energy security. There's a continent that is just
That's
next
why
door.
Macron
That's what Macron is in Kenya. Yeah, exactly.
There's a continent that is just next door to you. No problem now. Tinubu likes Paris. I'll go and sit down with Macron. That pipeline, you have capital. You can fund it. But there will be some requirements around how you keep technical expertise locally, how we ensure that Africans participate in this thing. You can get Europe to fund its energy security, and you as a continent can benefit.
From China, though.
But
That conversation is happening already. You know that, right?
it should happen.
After this Russian-Ukraine war, right? Europe is now beginning to look at what the other alternatives are.
Yeah.
And they're coming so there is
But
right
there are
now.
positive or negative
No,
outcomes from
they,
this.
of
This
course,
is where
they won't come cap in hand.
This is where African leadership has to be prepared. Because we could be recolonized. That's the negative.
Because we're not
so the
demanding
terms-
enough. What you're saying, right?
Yeah.
We're not
No, so the
demanding
terms are clearly going to be different, right?
I hope so.
Yeah.
But
so
we don't have guns.
They are
So-
not.
So if we don't have guns, how do we decide what
They are
we
not.
want?
They're not.
So what has happened, right? It's important for them, for their survival, to look elsewhere for crude oil, to look elsewhere
But they could bring
for
gun.
gas.
They could bring gun first.
No, they're not bringing gun down.
They
We're not
could
talking
do-
about.
no, they've already
could
started
bring
being
gun.
hostile. Have you not seen what is happening to Aliko or with the Ethiopian fertilizer plant? So for significantly, one of the things Aliko's plant or proposed plant there does is that it undermines a large part of the European fertilizer production industry, right? Because it's cheaper When you add cost of shipping everything to get from Ethiopia
So it's better to
into
get it,
Europe,
yeah.
so
Ethiopia is closer to.
you get so it makes a lot of sense.
Yeah.
Now they already see it. They've already started fighting the guy. They just signed contract though. They've just put they've started fighting the guy.
Our friend. They will not do things out of benevolence, but we need to find where there's common interest, right, and align and ensure that we don't get screwed.
I think the thing
but also
is,
it's important that we also have
I think
sovereign
the thing is-
capabilities.
No. I think the thing
because
is,
if we disagree, they fit just bring guns.
Mo,
say
leave
they want
that
to
one. Mo, leave that one. There's always that internal domestic consumption that we can start with first.
Explain.
With
Everything.
the low purchasing power that we have.
So yes,
Guys, we gotta move though.
okay.
We gotta move. We gotta move. We gotta move.
okay.
We're
Because
done with this topic.
this
So
thing
let's-
is paining
Yeah,
me,
yeah.
but it's fine.
I mean, there'll be time for more of this, but let's move on to another topic. I want us to close with.
like this.
Don't worry, I'm enjoying it.
We're gonna close with equities. I mean, it's been a very interesting first 4 months.
Oh wow.
Market is up 50% at least as of April. I think it's probably still slightly 55%
Yeah.
year to date, which is great because some of us put money in and out in that market. So interesting.
So your cash wasn't on the sideline.
No, it wasn't on the sideline. Hell no, it wasn't on the sidelines. But results have been coming in. I just wanted to know whether, I mean, let's look at it from all angles. Positives, negatives, telcos, banking, consumer goods. What has been your feelers so far?
I think my
The good,
bride.
the bad, the ugly. So let's just do the good, the bad, the ugly. So let's start with the good.
The good for
and the
me.
results so far.
Yeah, the good for me is MTN, clearly. And if you look at the fundamentals of the business, not only have they come out of the woods with 2023, 2024 result into 2025, they are printing and minting.
Take a floss.
They are printing and minting money. I think they will do 2 trillion by the end of this year in terms of net income. I'm not talking about top line. Bottom line.
Okay,
2
that's
trillion.
more aggressive than me.
Yeah, yeah. I'm not talking about PAT now. I'm
Where
talking
will
about
you get 2
PBT.
trillion from?
PBT.
Yeah, PBT. Quarter one, PBT.
Okay, yeah, okay, well,
Quarter one,
same
PBT. They did.
Okay. I thought you said PAT. PAT
No,
is
no.
aggressive for 2 trillion.
Yeah,
PAT,
yeah.
yes. They can
Quarter
do-
one,
I have
PBT.
1.6
Okay, they did about 500, billion, right? So if you decide to extrapolate and all of that, that's number one. Number
Be
two.
careful with extrapolation.
But
though.
wait, I'm going somewhere. We did an analysis that in a year, eve of election, okay, there's a positive correlation between consumption of data and eve of election.
When you say Eve, the year before election.
Yeah.
Okay.
People will get to talk all of these
Argument and all
argument
that.
and everything. You are consuming
Asking about
data.
online.
So what is happening now is, and if you look at their financials, all right, data is catching up or has actually overtaken voice.
Yeah, since last year.
When was the last time you actually made a call through voice?
I mean, today, though.
Exactly.
It was kind
That's
of weird.
number one. Number two, they've now moved into fiber to home through Fiber
It's
X.
a new growth market.
So the likes of CobraNet, IPNX,
Fiber One.
21 Sectors, Fiber One, I sit on their board.
What about
They will come after
Starlink?
them. Starlink and all of that. They will come after them. In fact, it's
Are
even
you
a
worried
loss.
that Starlink, the likes of Starlink, are
So,
actually taking
there
some
we-
dominance pricing wise and
So the
quality
price for
wise?
Starlink is elevated compared to Fiber X. Fiber X is actually cheaper.
Oh really?
Yeah, it is
Fiber X
cheaper.
or Fiber One?
No, Fiber
That's
X.
MTN.
Oh, that's
Fiber
MTN,
X is
Fiber
Fiber
MTN.
X cheaper than Starlink?
Yeah, it
Yeah,
is
it
cheaper.
is cheaper. It is
It is
cheaper.
cheaper.
I use both.
It is cheaper.
It's cheaper. Way
And
cheaper.
it's relatively stable.
And it's
when
quite
it
good,
when
too.
it rains, you probably might experience disruption, with Starlinks, right?
Yeah.
But with Fiber X, and I'm not advocating for them, but I'm only just sharing with you, the dynamics of that business.
Yeah.
They are also now going to cloud services. On the back of all of these, we've mentioned infrastructure. They've now put their money on infrastructure.
Yeah, which is good.
Most of, if not all, the other telcos or ISP providers and everything, they sit on that infrastructure.
Including Airtel? I thought Airtel was doing pretty well.
They sit on I'm talking about the IHS infrastructure.
IHS,
okay.
Yeah.
Which
So
MTN
The
also
infrastructure is not owned by MTN Nigeria, it's owned by the group.
Bro,
Yeah, man, we still
if you
saying
and
that.
I we are from the same family,
You come to me in the middle of the night and say to me that, bro,
And you give a better deal.
give me a
to
discount
them.
now.
Yeah,
Do you understand? So from cost structure, cost management, it will happen for them, right? But I'm even talking about the monies and the potentials of that business. I think it's a monster. I'm not sure of any other business that can do 2 trillion by the end of this year.
All right, that's MTN.
I'm quite excited about the spin-off. What do you think about the spin-off?
Let's talk something else. What other good do you see? That's not big. This is an MTN conversation.
What's more?
Yeah, I mean, let's do
I
time now, because
thought the
a lot of
banks.
things to talk about.
I thought the banks were strong.
the banks.
Yeah. I look at cash earnings. Everybody's
Okay.
looking at headline.
I mean,
earnings, right?
I look at
Because
cash earnings too.
because it's
so-
cash earnings that pay dividend.
Only 2 banks
Zenith,
so far.
Zenith,
3 paid
Zenith,
dividend.
Zenith, yeah, but
Zenith,
it's cash earnings,
GT,
cash
Wema.
earnings that pay dividends, right? So I look at Zenith's
Stanbic, I
cost
think.
of risk is normalizing. Remember, they took about just close to 8% cost of risk last year, about 800 billion. And I think probably this year they will do 2% or less. That is basically almost 500 billion in earnings head start. So we saw that evidence in the Q1 data. So when you
Which was
normalize
strong.
when you normalize that, Zenith probably has the highest earnings growth of the tier 1 banks, and it is cash. Right, and for that cash they will pay dividend. So I think that dividend crown that GT Bank has had over the last 2 years, Zenith would likely overtake them by April.
I interviewed Shagun recently, and he told me clearly that he's always going to target 15% dividend yield. What's going to be
No,
that?
he can, right? Because he has the cash yield. He has the cash earnings to do it, right?
For this year or for last year?
Because
he said that's the target all the way.
He paid what? Less about 60% of distributable income in dividend, right? And he has the capital base to pay it because his RWAs are quite small because he doesn't take any risk.
No risk.
I love GT. I mean, I do love GT, but when I look at it over the next 12 months, I think that on an earnings basis,
Zenith will probably be
Zenith
ahead.
will outperform. GT will always trade at a premium, but the valuation gap between the two companies should narrow.
Sam, let me get you.
more
Sam,
valuable, right?
Sam, let
It's
me-
currently more valuable at the moment, though.
Well, but not in valuation terms.
What kind of valuation metric?
Yeah,
are you
we're
talking
talking
about?
about the multiples.
Price to book.
Yeah,
okay.
Yeah, the
Because
price to book is still less than one.
is on
It's about
1.5.
1.5?
Or sub 1.
which one is on sub one?
It's got to be Zenith.
Zenith. Yeah.
And I think that when I look at the sustainable ROE in that company,
Yeah,
you should be looking at a bank that should be trading at 1.2, 1.3.
1.3. Yeah.
Book value.
Sam,
I
let me
know
get
what's
your get your contrarian view on this one because what
What's your good?
I'm going to say something.
I like
Let me
this
just
bank,
say-
by the way.
Let me
I'm
say
just saying
something.
it
I want to say
Yeah,
something.
well,
Which is
but
going to lead up.
all the cash is
I
not
want to get
really
your
true
contrarian
cash.
view on something,
But
right?
When you say banks,
Time, guys.
Okay.
Time, guys. Time.
I want to get contrarian view on something, which is it's going to be my interesting because it's contrarian. UBA, right? So UBA, right? Bad headlines, right? No dividends. You know, ROE, whatever it is, 11-12%, cost of capital, phasing cost of capital bank 22%. It deserves a 0.36 price to book.
Does it?
But I think
Does it?
that is an interesting turnaround story there, right? And I want to see whether I want to get your contrarian view on UBA.
No. So,
Because
I love when banks don't pay dividend because it creates buying opportunity for me,
Yeah.
especially if the core earnings are not impaired.
And especially when you're in an investment environment that
Yeah.
everybody likes dividends, right? So it makes it cheaper.
but you also need to look
Now
at. You also need to look at the earnings quality, the mix
Yeah.
of their income.
So
if you are making most of the money from FX, then you need to ask yourself,
but that
is
FX
this
is
sustainable?
But that FX was
actually
done.
for 2025, they
Yeah.
suffered a derivative loss,
Yeah.
and they suffered an FX
An
loss.
FX
So,
loss.
so
Yeah.
both are actually deducting
Yes.
from the PAT.
Yeah.
If you the work I need to do, and I haven't done that work
Yeah.
yet, is to understand the structure of where those losses came from,
Exactly.
and seeing how repeatable those losses potentially will be. So that's one. But however, the core earning engine, NII was up 3.5%.
Yeah.
So that is still pumping.
Yeah.
Where things got
crazy was on the asset quality side. And I think this is basically the end of regulatory forbearance. And I'm suspecting the central bank forced them to basically take 100 provision on related party loans. That's my suspicion.
Yeah.
So
that's
one time, just a one time.
So I've seen Q1 cost of risk have fallen materially to 2.5. I'm going to track it over the next 2 quarters. If that trend stays, and then you're now looking at a bank that should normalize at 15% ROE. And when you look at that, a fair valuation to pay for that type of sustainable ROE is around 0.5, 0.6 times book from 0.4 today. So that's on those appreciation alone. That's
so there's an upside.
Exactly 50% upside. And that's the,
I mean, in addition to that, if you look at their price earnings,
I think UBA is cheap, and UBA shouldn't be this cheap.
well, it depends on what
I'm always nervous because I don't want to go and talk and all of a sudden stop saying
if you don't buy UBA, you shouldn't be buying that thing.
But some banks in Nigeria are actually fairly valued. All right.
UBA has 0.36.
Yeah, if you look fairly valued, I don't want to use the words undervalued or overvalued. I would rather just stay on.
You think it's fair value?
Fairly valued. In the sense that if you look at their price earnings ratio, right, the GTB and the Zenith of this world, they are still sub 10.
If it gets to 10, I'm on holiday.
Yeah. So it's still sub 10. So what that tells me is if these banks continue to churn out good earnings every quarter, perhaps you see those the PE ratios coming down or moderating. And that potentially massive opportunity.
I don't think so. Let me explain why.
Let me finish. Okay. Yeah, let me finish. Especially now that they've cleaned their books. All right. That means they're starting on a clean slate. Okay. And I'm hoping that they will run the bank and try as much as possible to minimize their NPLs.
Betting against 330 years of data.
The most important thing for me, outside of the NIM, which is the net interest margin, is their fees and their commission. How they can build infrastructure that would continue to generate income from them on their fees and their commissions. If they're able to demonstrate that capacity in the next few years, perhaps you see them making a lot more money and their price earning ratios will become more attractive. The price to book still in the corridors of 1 or 1.5, I think is relatively cheap. When foreign investors start coming in with a true FTSE or true Morgan Stanley Composite Index, those are the numbers that they will be looking at. And those guys, they don't come in looking for 1 billion naira or 2 billion naira. They come in with tens of millions of dollars. They are going to ask themselves that, okay, let's look at our playbook. Our playbook, price to book, checked. PEG ratio, which is price earnings and growth, and perhaps PEGI ratio, including the yield, check. Float in the market, is it liquid? If I ask my broker for $10 million, can he get me $10 million? And not say to me that, you need to to get that in the next 5 years. Check. Okay. Then free cash flow from what you said. Which of these institutions or banks are actually making cash? Because you could have paper profit and not cash profit. Do you understand? Also check. In my view, those are the names that I think that those guys are going to come for. So in the Fugas or industrials. So when I'm advising my investors, I say to them that pay attention to all of these things. Because it's not a matter of if, when. Those guys are going to come in. Because they see relative FX stability. Your macros are becoming relatively okay. They will come in at some point.
So I would I don't disagree. So we are aligned, right? The only slight challenge that I have, because I think these banks should be trading at significantly higher multiples than they're currently trading when you look at it relative to the returns that they generate. In nominal terms and even adjusted for inflation. However, there is significant question marks in any sustainability because of the discussions we've been having since the morning, which is high interest rates. Right? You look at a bank to trade at a higher multiple sustainably, they must demonstrate that they are able to intermediate successfully.
How do you mean intermediate successfully?
So you need to be able, you need to have
For like the last time Nigerian banks traded at significantly higher multiples, the loan to asset ratio for this bank was significantly higher as well. That's how you analyze a bank that is successful, a bank that can lend through the cycle over time successfully. When you have a bank where you are like 25% of your assets are in loans, yes, you are generating profit, but investors will never put a high multiple on those profits because they know that it's dependent on the macro cycle.
Absolutely.
Right. However, and this is why I think Wema Bank could be very interesting, because I've been doing a lot of work on that company. Because a lot of their net interest income is actually coming from their loan book and not the securities portfolio. And for me, if you can do that while keeping cost of risk through the cycle anchored, and it looks like their risk parameters are interesting, and in my head, it doesn't make sense when I look at the vintages that they are lending to and the sectors. And so a big question, and one of the reasons why I want to meet with the management again, is to understand how they are managing credit risk. If you are able to manage credit risk sustainably and you are earning above an investment security yield, the market will have confidence on the sustainability of your earnings. And as a consequence, your multiples will re-rate. That is the next leg for the Nigerian banks that needs to move. I was having the confidence that we were going to go into that or see evidence of that in 2026. But this higher interest rate environment will allow the bank to stay lazy for at least another 12 months. So you will earn compounded ROE plus dividend. So returns are not bad. If GTCO is promising you 30% ROE and it's going to pay out half of that in dividend, right? That is a book value growth of 15% plus a dividend yield of 15%. That is a 30% capital return. I'm happy with that, no problem. So that is okay. But to see that multiple jump above that 30% to give me 50%, 70% return, you need to see the structure of the earnings shift in favor of the loan book. That's what I think.
All right, guys, the ugly. What's the ugly? What's the bad, rather? The ugly.
I'm very concerned about discretionary consumer names, especially the brewers.
Really?
Yeah.
Why? Their numbers are not that bad.
Yeah, they are not, but I don't think the shock has come yet.
What shock
are you expecting?
Energy shock.
Because we're not seeing inflation, we're not seeing it yet.
Margin pressure. So the non-discretionary guys can easily. So like Unilever can raise prices. The guys that are anchored to more volume inelastic products, like Maggi, they can raise prices, and we're already seeing evidence that they are doing that. Even USC and are talking about they've taken about 2 price increases already. I'm thinking about taking another price. The problem I have is, firstly, I think there's a structural margin decline in beverages. And I think a lot of that is to do with behavioral change among young people. People just don't drink beer as much as they used to. So I am not.
So how come they are growing revenues at that price? They're growing.
Pricing. So the few people that are drinking beers, they are making them pay more. The base of people that are drinking, and I think this is not just a Nigerian problem, this is a global issue. And also on top of that, right, I think obviously energy cost is a significant portion of their operating cost, right? And that has gone up significantly. And I don't think in the short term they will be able to raise prices fast enough to offset the input cost pressure that they are going to face. So I think when you look at and on top of that, Q2, Q3 are seasonally low quarters although World Cup usually adds a little bit of beer drinking to it, so that might distort the number.
I disagree.
For me, I would rather look at the players in the market as what could go wrong. I remember in 2007. All right, so I went to Debonair's. If you go into Debonair's, they'll give you a tag, you wait. And I saw 2 cleaners, right, just enjoying themselves, mopping the floor. The guy A says to guy B that, have you seen First Bank today? I saw it. It's just going off. He said, did you buy? He said, no. Say, if you buy today, tomorrow, you don't go. In that moment,
once you see that,
I just called my broker. That's dude. Please sell. The retail investors are coming in now. Anytime they see a 50% yield to return to date is attractive. They want to go in. Do you understand? And there's a massive exodus of retail investors going into the into the market right now.
Exodus or inflow?
Inflow.
There is.
Influx, rather, going into that market. And most of these guys do not understand the dynamics. What they see is Nigerian bureaus today at 75 tomorrow.
Good, just tell me what to buy. I
What
said, no,
to
you
buy.
gotta check. Wait, make up. Should I buy? Should I sell? No, you gotta understand.
So
the
for me,
No, it's
I am actually scared because you need professionals to tell you, okay, these are the fundamentals, right? But there's no platform for you to have that conversation with them and say at scale and say to them that, oh, guys, be careful. If anything happens,
Now.
yeah. So, but for me, I say let them come. If anything, no, don't say that. Don't say that.
The game is the game.
Because
you have markets like
yes, we are the ones that
we bought the brunch of complaints. Whether it was venting you was
Let them come.
most of these guys they did not experience 2007.
It's fine. Let them come.
Because it's that lack of memories of 2008 that's going to create our bubble for us.
But also,
that generation needs to go now. So at this generation, we need to drop their own.
we need to be careful.
That's your own ugly.
Yeah, because if you look at the US market as well, they experience the same thing. There are certain stock like the main stock, right? GameStop, right? And you have, I think, Robinhood and which other stock too? Palantir as well. You have a lot of retail investors backing it. The moment those guys exited, right, you see those shares.
Yeah, but let them come. You have countries that are supported by retail. South Korea, for example, is heavy retail. They're very supportive of their equity markets.
Dangote wants 5 million. Is it 5 million or so? Oh, is it 5 million?
I don't know if it's 5 million.
I don't think there's even up to 5 million.
There's
I think there's up to 5 million CSCS accounts.
No.
There's actually
Active accounts. There's something I'm not sure I can share.
Share. No, but share. You said it. Might as well share. Share with the class.
But there is a plan for a deep retail play on the IPO.
Yeah.
That is going to distribute it. And the plan is to be able to distribute it on the streets.
What do you mean?
Yeah, through mobile phones and also I heard that.
Yeah, so there's a real.
Major.
that's similar to MTN.
So there's a particular guy that advertisement. They will now hopefully buy something else.
Let them come.
Okay, so what Ugodre just said,
when they will leave,
it's not my place to share, but it does look like there's a player in the financial services distribution space, POSs, that might be distributing.
Oh, that's beautiful.
I know that already.
Points,
it's in news already.
Yeah.
Anyway, guys,
and then I think the market
is not my place to say. This is my point.
I think the market is sleeping on Seplat.
Sleeping on Seplat.
Yes.
At
11K, yes.
Yeah,
I agree with you.
Seplat is
Waiting for the Q1 result to come out.
No, but regardless, even on oil is done.
But the FY wasn't so great though.
Just wait. Let's just wait.
Well, look at crude oil in 4 months now. On the average, it will be around what? Maybe 90, 100.
Seplat.
I like Seplat. Maybe I'm a big fan.
Seplat is going to transform from an oil business into a gas business with credible, bankable LNG off-takers. That will move from a 5 times or 4 times if you arrive with that company to a 15 times if you arrive with that company.
Yeah.
That's what is going to happen.
Yeah, but if you look at that space, you only have Seplat and Arnold.
Yes.
Yeah.
But Arnold doesn't have the balance sheet that Seplat has.
No, you're right about that. But the management of Arnold,
they're good.
They're good. You need to think about that. And their investment in Northwest as well. The Renaissance guys is also
that the thing is that market love that company so much, and when the market loves the company too much, they start getting nervous.
All right, guys.
Because they also start playing them against each other.
Over 2 hours.
Good Lord.
It's been over 2 hours.
All right.
Mike, this is
I kept looking at my watch. I was like,
honestly,
I was
like, there's still so much we haven't covered.
So much. Trust me, guys, so much. But I mean, we got to call it quits. It's been a long day for all of us, so we got to take a rest. You can see what we did to the drink.
It's empty.
Yeah,
okay, it's
not
empty.
We never finish it. But this has been Drinks and Mics brought to you by NGX. Thank you so much for being on the show. We had a good time. Any shout outs for a guest?
No, very good conversations.
Yeah,
absolutely. I shared the stage with you. I'm not sure if you remember. sometime about 2 years ago.
Okay.
It was a wonderful conversation. Right on stage, we started talking about a fractional.
Tokenization of
Fractionalization, yeah. So it's like, it's when like minded. It was actually, so it's.
tokenization of assets, fractionalization.
Buy means
It doesn't like Tunji now. Tunji doesn't like him because the guy sounds too much like me. How can you have two people fighting
guys, tell us what your. I mean, we'd like to hear your views on some of the comments today. Where do you stand on it's been a heated argument all through.
Tunji is the people's person. They love him.
I know, right? People's uncle. I like that.
Tunji has his core fan base. But thank you all so much. We want to see you on the comment section. By the way, next episode, it's a young people edition. We're not all going to be here.
I love it.
Looking forward to when I was youth.
No, I saw that list. I like those guys.
Solid lineup that we have for the next Drinks and Mics. It would be interesting. I can't wait to see that myself.
Looking forward to
when it does come out. So shout out to the guys that agreed to be on the panel. Really appreciate them a lot.
Boom.
And then we'll be back. We'll be back in a couple weeks.
The old guards will be back.
Maybe if Sam is free, we'll probably drag it because there's so many things to talk about that we didn't exhaust today. Hopefully we'll exhaust it on the next time we're on the set. Thank you all so much for being a part of today's show. Until we do this again next time, do have a profitable week ahead.
All right.
Peace. Woo.